Hey guys, welcome to another video by the Financial Controller. My name is Bill Hanna, and today I'd like to discuss the story of WorldCom and the fraud that occurred. Now, this is a story that goes back to the year 1999, and so we'll go through the business, what kind of service they provided, the events leading up to the fraud, the actors that were participating, which were the CEO, the CFO, and the controller, and just like go through it step by step and understand it. Even though these events took place 20 years ago, I think they're still very relevant today. It's important for us to learn from the events and so that we don't fall in the same mistake. As they say, those who don't learn from history are bound to repeat it. And so we'll go through the story and understand the business, and we'll begin by understanding what the business is. WorldCom provided phone service. These are landlines and mobile phones. They basically rented phone towers and these phone lines, and basically paid rent and then charged the customers for the service. The business was going really great between the year 1994 and the year 1999. Revenue and profit were soaring. Wall Street loved the company, and as you can see, the performance was really upward and to the right between the year 94 and the year 99. Things took a turn in 1999. There was a decline in the business due to the rising competition, and they were under pressure to provide better financials, better income statements. During the first quarter of the year 1999, there was a meeting between the CFO, Scott Sullivan, and the controller, David Myers, and they basically met to discuss the financials for Q1. Basically, the CFO looked at the financial results and was unhappy with the margins, and he said to the controller that these numbers cannot be right. The controller, David Myers at the time, did what he had to do, and he went back to his team and basically, dissected the financials, then went through entry by entry, and basically arrived at the same conclusion, at the same financials. And so he goes again to meet the CFO, and he tells him, we looked at the financials, we looked at everything we did, we didn't find any mistakes. These are the financials. Again, the CFO looked at it and said, this cannot be right. We cannot be doing this poorly. These margins cannot be correct. You have to look at it again. So again, the controller went back to his team and dissected the financials, again came back. So basically at that time, the CFO recommended to the controller that he would book a journal entry. I'm calling it here bogus entry because basically there is no support for the entry. It's just like out of thin air. He said we need to book an entry so that we can bluster or increase our gross margins. Basically, the controller, was very reluctant to accept that, but he agreed because he thought that the CFO knows the business more than he does, and just because of the conviction the CFO had, and that the margins cannot be right, the controller reluctantly agreed to book the journal entry, thinking that maybe in the subsequent quarter, in the second quarter, he can then figure out what went wrong and fix it and go forward from there. But again, Q2 comes around. They're looking through the books to find what's wrong. They can't find anything wrong. If they reverse the entry from the first quarter, they might be in trouble because then the margins will be going down in Q2. So again, they had to book the same journal entry in Q2. So again, this same bogus entry, which is just out of thin air. Comes Q3, then the same thing happens again. They still can't find anything wrong. They book the same entry again, extremely wrong accounting. And if you look at the interview, I'll leave a link in the description below. There's an interview that David Myers, the controller, gave to Ernst & Young because David Myers comes out of Ernst & Young. He was an auditor for 11 years. In that interview, he talks about his thought process. Like the first time he booked the bogus entry in Q1, and then he booked it again, and then in Q3 he's now thinking, something must be wrong. What am I doing here?
Unison.
Sound doctor?
Yo, sound doctor. That shit fly, bro.
Let's go melodies, psychedelic. Yeah, that's kind of cool.
This is going from just like aggressive accounting, borderline now fraud. The thing here also in Q3, if you watch the interview, which I'm going to leave a link to down below, there was the bogus entry that they're booking wasn't enough to increase margins. And so the recommendation from the CFO at that time is to use creative accounting, which basically he told them, we're paying expenses for the phone lines, so all these phone lines that they're renting. So they're paying rent for these phone lines and charging the customer a fee. For the expense of renting these phone lines, the CFO recommended that the company will capitalize these expenses. Basically, this is implying that you take the expense and turn it into an asset. And obviously, we know from experience that an asset is basically an expenditure that will create a future economic benefit. So in this case, there was no future economic benefit. They're paying the rent for the phone lines to use in the period, so completely violating the matching principle. And so they did here two things that were fraudulent in Q3 of 1999. They booked a bogus entry and they did an expense misclassification. And basically here is where trouble began because at that time they have a star accountant that joined the company. Her name is Cynthia Cooper. She was part of the internal audit team. She was vice president of internal audit. And she looked at the books and records and realized that something is not adding up. And so she started interviewing the controller and the CFO, and she basically is the one that uncovered the whole scheme here. And so basically what she found is that the company violated two accounting principles. The first one is the objectivity principle. And the objectivity principle calls for when you book any journal entry or invoice or expense, you need to have supporting evidence. You need to have a supporting document. When the company or the controller here booked the bogus entry, there was no support for that. As we said, this was an entry recommended by the CFO to the controller, so they basically violated the objectivity principle. The second principle they violated is the matching principle, which calls for a match between a revenue and expense that is booked on your books and records. And basically, the expense misclassification here violates the matching principle because basically they booked revenue from fees from customer and no matching expense. They took all the expense for the phone lines and buried it in the balance sheet as an asset, which basically is incorrect because there is no future economic benefit as an asset would need to have. So basically, Cynthia Cooper, the VP of Internal Audit, uncovered this fraud. She reported it to the audit committee and the board of directors, and basically things just became to unravel from there. The Wall Street got a hint of what's going on, and basically that led to the company filing for Chapter 11 bankruptcy in 2002. And from there, the company or the remaining assets of WorldCom were acquired by MCI. And basically MCI later on was acquired by Verizon. And so Verizon became the surviving entity after WorldCom. So there it is. This is WorldCom. Again, we share these stories so that you can learn from it. Personally, as a controller, what I learned from this is that whenever I'm in doubt, whenever there's a question on the integrity or a question on a booking that I'm making or a journal entry, seek the counsel of someone that you trust. First you can search the literature of accounting, find relevant examples. If you can't, seek. Hey guys, welcome to another video by the Financial Controller. My name is Bill Hanna, and today I'd like to discuss the story of WorldCom and the fraud that occurred. Now, this is a story that goes back to the year 1999, and so we'll go through the business, what kind of service they provided, the events leading up to the fraud, the actors that were participating, which were the CEO, the CFO, and the controller, and just go through it step by step and understand it. Even though these events took place 20 years ago, I think they're still very relevant today. It's important for us to learn from the events and so that we don't fall in the same mistake. As they say, those who don't learn from history are bound to repeat it. And so we'll go through the story and understand the business, and we'll begin by understanding what the business is. WorldCom provided phone service. These are landlines and mobile phones. They basically rented, phone towers and these phone lines, and basically paid rent and then charged the customers for the service. The business was going really great between the year 1994 and the year 1999. Revenue and profit were soaring. Wall Street loved the company, and as you can see, the performance was really upward and to the right between the year 94 and the year 99. Things took a turn in 1999. There was a decline in the business due to the rising competition, and they were under pressure to provide better financials, better income statements. During the first quarter of the year 1999, there was a meeting between the CFO, Scott Sullivan, and the controller, David Myers, and they basically met to discuss the financials for Q1. Basically, the CFO looked at the financial results and was unhappy with the margins, and he said to the controller that these numbers cannot be right. The controller, David Myers at the time, did what he had to do, and he went back to his team and basically, dissected the financials and went through entry by entry, and basically arrived at the same conclusion, at the same financials. And so he goes again to meet the CFO, and he tells him, we looked at the financials, we looked at everything we did, we didn't find any mistakes. These are the financials. Again, the CFO looked at it and said, this cannot be right. We cannot be doing this poorly. These margins cannot be correct. You have to look at it again. So again, the controller went back to his team and dissected the financials. Again, came back. So basically, at that time, the CFO recommended to the controller that he would book a journal entry. I'm calling it here bogus entry because basically there is no support for the entry. It's just like out of thin air. He said we need to book an entry so that we can bluster or increase our gross margins. Basically, the controller, was very reluctant to accept that, but he agreed because he thought that the CFO knows the business more than he does, and just because of the conviction the CFO had, and that the margins cannot be right, the controller reluctantly agreed to book the journal entry, thinking that maybe in the subsequent quarter, in the second quarter, he can then figure out what went wrong and fix it and go forward from there. But again, Q2 comes around. They're looking through the books to find what's wrong. They can't find anything wrong. If they reverse the entry from the first quarter, they might be in trouble because then the margins will be going down in Q2. So again, they had to book the same journal entry in Q2. So again, the same bogus entry, which is just out of thin air. Comes Q3, then the same thing happens again. They still can't find anything wrong. They book the same entry again. Again, extremely wrong accounting. And if you look at the interview, I'll leave a link in the description below. There's an interview that David Myers, the controller, gave to Ernst & Young because David Myers comes out of Ernst & Young. He was an auditor for 11 years. In that interview, he talks about his thought process. Like he booked the first time, he booked the bogus entry in Q1, and then he booked it again, and then in Q3, he's now thinking, something must be wrong. What am I doing here? This is going from just like aggressive accounting, borderline now fraud. The thing here also in Q3, if you watch the interview, which I'm going to leave a link to down below, there was the bogus entry that they're booking wasn't enough to increase margins. And so The recommendation from the CFO at that time is to use creative accounting, which basically he told them, we're paying expenses for the phone lines, so all these phone lines that they're renting. So they're paying rent for these phone lines and charging the customer a fee. For the expense of renting these phone lines, the CFO recommended that the company will capitalize these expenses. Basically, this is implying that you take the expense and turn it into an asset. And obviously, we know from experience that an asset is basically an expenditure that will create a future economic benefit. So in this case, there was no future economic benefit. They're paying the rent for the phone lines to use in the period, so completely violating the matching principle. And so they did here two things that were fraudulent in Q3 of 1999. They booked a bogus entry, and they did an expense misclassification. And basically, here is where trouble began, because at that time they have a star accountant that joined the company. Her name is Cynthia Cooper. She was part of the internal audit team. She was vice president of internal audit. And she looked at the books and records and realized that something is not adding up. And so she started interviewing the controller and the CFO, and she basically is the one that uncovered the whole scheme here. And so basically what she found is that the company violated two accounting principles. The first one is the objectivity principle. And the objectivity principle calls for, when you book any journal entry or invoice or expense, you need to have supporting evidence. You need to have a supporting document. When the company or the controller here booked the bogus entry, there was no support for that. As we said, this was an entry recommended by the CFO to the controller, so they basically violated the objectivity principle. The second principle they violated is the matching principle, which calls for a match between a revenue and an expense that is booked on your books and records. And basically, the expense misclassification here violates the matching principle, because basically they booked revenue from fees from customer and no matching expense. They took all the expense for the phone lines and buried it in the balance sheet as an asset, which basically is incorrect, because there is no future economic benefit as an asset would need to have. So basically, Cynthia Cooper, the VP of Internal Audit, uncovered this fraud. She reported it to the audit committee and the board of directors, and basically things just became to unravel from there. The Wall Street got a hint of what's going on, and basically that led to the company filing for Chapter 11 bankruptcy in 2002. And from there, the company or the remaining assets of WorldCom was or were acquired by MCI. And basically, MCI later on was acquired by Verizon, and so Verizon became the surviving entity after WorldCom. So there it is. This is WorldCom. Again, we share the stories so that you can learn from it. Personally, as a controller, what I learned from this is that whenever I'm in doubt, whenever there's a question on the integrity or a question on a booking that I'm making or a journal entry, seek the counsel of someone that you trust. First you can search the literature of accounting, find relevant examples. If you can't, seek advice from someone that is objective, someone that will give you the right advice. Don't just go it alone. Try to get help from someone else. So basically, this is it. If you're new to the channel, please subscribe. Appreciate.
Okay, good morning. Let me see if I've unmuted myself. Can you hear me? Audio testing 1, 2, 3.
Good, sir.
Good. Okay. So just now, as a warming up, is a documentary on the WorldCom scandal yang besar ini in the America Syarikat in the year around 2000 lah. So it's around the time of Enron. Last week we saw the documentary on Enron. So it's creative accounting, right? Accounting palsu lah. So that was a big one, 100 over billion. So WorldCom also sangat besar. They inflated I think the profit by more than 20 billion ringgit. Not ringgit, US dollar. So the CEO Bernie Ebbers dia kena 22 years or 20 tahun penjara. So dia meninggal dunia dalam penjara lah. I think a few years ago. Very sad case. Bernie Ebbers, CEO. The accountant, the CFO, the controller all got shorter sentences lah. So the lesson to be learned in the WorldCom case is kalau your boss pressure you to do accounting entries or to cook the books, so to say, yeah, you better don't do it because the punishment is quite stiff. Boleh di penjara. So often you see in the newspaper, the poor young fella in handcuff. Second minute. You see in the newspaper, the one in handcuff is often, maybe he's not the main culprit. The main culprit is probably his boss, the CEO, and he's just a scapegoat, or he or she is a scapegoat lah. I posted something in the WhatsApp group that they arrested somebody a few days ago. In your WhatsApp group, he was the independent director, and he basically was accused of accounting palsu also lah. The company is called GIIB, Malaysian company. Forged document, forged financial statement is an interim financial statement. Now in Malaysia, you have for listed company, you got the other quarterly announcement to stock market. Now the quarterly announcement financial statements are not audited, but the final annual report or the final audited accounts, the final one is audited. So this is, I understand, this is the interim one, which is not audited. So this director allegedly asked his accounting staff to manipulate the figures lah. Allegedly lah, because now it's before the court. He was arrested when he came back from Singapore. So this is before the court. It provides for punishment if you look at Capital Market Services Act and Companies Act. It provides for quite hefty penjara kalau convicted lah. So creative accounting is something that if you're asked to do, you better don't do, because what do you call that? It can be, if you get caught and charged in court, teruk case lah. Okay, let's have a look at the WorldCom again. There's an interview with the controller, the guy that was in the presentation. He was actually jailed also, but he's probably the innocent party in a way, because he's listening to his boss. The boss asked him to do, so he do lah. But in the end, all three parties kena. Bernie Ebbers kena 20 years, 20 tahun penjara. So dia telah meninggal dunia di penjara. Then the CFO, I think kena 5-6 years around there. Controller, I think kena maybe a few months lah, but still not worth it, right? So he is actually being interviewed. You may want to hear his side of the okay, of his picture of the picture. Okay. We can also watch a few presentation. We are supposed to do presentation later on. You can see an example of presentation in class on WorldCom as well. Okay, so let's have a look at it now. If you got any questions, please unmute yourself. And interrupt the class. No problem. Any questions so far? You want to raise or just discuss? You can unmute and just join in the conversations.
Wabarakatuh to Madam May and our fellow classmates. We are from Group 6 and today we are going to present on the case study of WorldCom. WorldCom Group is the second largest telephone company in United States and one of the largest companies that handle internet data traffic worldwide. With its high-quality services provided, WorldCom managed to operate in more than 65 countries and had network facilities in 21 countries throughout Europe, North and South America, as well as the Asia-Pacific region. WorldCom was first known as Long-Distance Discount Service, which were invested by Bernard Abbas, which eventually became the Chief Executive Officer of WorldCom in 1995. Later, in 1997, WorldCom managed to acquire 65 companies, including MFS Communications and MCI Communications, which can be considered as a major acquisition as they provide major supply of internet services and largest provider of telephone service respectively, which boosted the stock price of WorldCom up to $64.50 per unit. However, WorldCom's successful lasted until 1999 when they failed to merge with Sprint Corporation as US regulator blocked the merger and US Securities and Exchange Commission requested for information of accounting procedures. Later, in 2002, Bernard Abbas resigned from the position of CEO, and Securities and Exchange Commission files for fraud charges against WorldCom, which later on made WorldCom as the biggest bankruptcies in the United States. The first issue that can be seen in this case is the ineffectiveness of the top management in managing the company. With the leadership of Bernard Abbas, the company failed to practice a transparent communication among every department as Abbas developed an individualistic culture. Furthermore, due to the fraud made in accounting, Abbas started to restrict the scope of
So the common trait you can see between Enron and WorldCom is both got ethical issue at the beginning already. All right. So ethics is probably important if you want to prevent the recurrence of this kind of accounting scandal again. And secondly is the auditor. Ini juru audit. It's the same juru audit with Enron. It's also Arthur Andersen. So I think the quality of the auditor is also important. If the auditor is not ethical, not honest, not objective, I mean, there's no question on the skills, on their auditing skills. I think the more important issue is the auditor objective? Are they honest? Are they playing the role honestly and ethically? Now, if they have done so, they would have blown the whistle early on, and this scandal would have been nipped in the bud. I think the same goes for 1MDB, our own accounting scandal of financial fraud in Malaysia that involved, I think, about 50 billion ringgit. Actually, our scandal is quite small relative to the American ones. Like the WorldCom, they're talking about 100 over billion US dollar. So in terms of size and amount, 1MDB is not that big compared with them, compared with the US cases. But nevertheless, in the 1MDB case, also there were the big four auditors, Pricewaterhouse. Probably Pricewaterhouse is the only one that's not affected because they refuse to sign off. It is Deloitte, KPMG, and Ernst & Young. These three big auditors actually sign off the accounts of 1MDB as Bernard and Saksama true and fair. So when they sign off, that means they're already part of, they're complicit in the fraud also. And all three of them were actually fined, or they pay compensation to the government to settle those charges against them. In the case of Arthur Andersen, in this case, they lost the license to audit. So from those days, there were big five auditors, which is Arthur Andersen, Ernst & Young, KPMG, Deloitte, and Pricewaterhouse. The big five become big four because the Arthur Andersen lost the license. And in Malaysia, Arthur Andersen merged with Ernst & Young, and they were absorbed into Ernst & Young. So Malaysia now is also big four. Now the government is quite reluctant to go and suspend another license because they don't want the big four to become big three, So in the 1MDB scandal in Malaysia and another big scandal internationally, now the approach is go after the partners, impose a big fine on the partnership, but specifically go after the partner that sign off those accounts and then charge them in court and send them to jail when they're found guilty. So that's the approach. The reason why they take this approach is because if they close down the accounting firm, you get less and less accounting firm around to cater to the big companies. And this will actually cause other problems as well. So they decided that this is a better approach, the government, to go after the partners. And if you close down a big accounting firm, also you will cause a loss of big loss of jobs, among junior auditors. And you will discourage a lot of young people to become auditors as well, because it becomes a very dangerous job, right? Where you can be charged in court and sent to jail on conviction. So again, these issues about how to prevent such cases from happening again is try to inculcate good ethics, especially tone at the top among the board of directors, the CEO, and so on. Send them for training, and also auditors. You need to remind them that they are the goalkeeper, so they need to do their job honestly. And then if they don't, there should be punishment where they can be charged in court and on conviction be sent to jail. So these two things. And a third thing that's common between Enron and WorldCom is that eventually there is a whistleblower that resulted in discovery of this fraud. They come into the open. They are the internal auditors, juru audit dalam. So the juru audit dalam in this case, in Enron and WorldCom, turn out to be very brave people. And by the way, this juru audit of these two cases, WorldCom and Enron, are women. So maybe Wanita is more brave in blowing the whistle. So the government also realized the value of whistleblowers in bringing to the forefront, bringing up raise red flags early are the juru audit dalam and the own staff can also blow the whistle. So in these two scandals, Enron, WorldCom, Enron especially, the government in the United States decided to pass a new law called the Sarbanes-Oxley Act, short form called SOX, where they mandated, that directors have duties to follow, pengarah bebas have duties to follow, and auditors have duties to follow also, and they are required to whistleblow, and they impose a lot of regulations on kawalan dalam, internal control, and pengurusan risiko risk management. So this act was passed in the United States. It's called Sarbanes-Oxley, and Malaysia followed in 2007 with our own act that mirrors the Sarbanes-Oxley Act in a lot of ways. It's called CMSA, Capital Market Services Act, right, 2007. Then on top of the Capital Market Services Act, we also Atas Syarikat 2016, which was a new act to supersede an old act that has been there for a long time. So with these two acts, now Kerajaan and the Securities Commission, which is the corporate policeman of Malaysia, in the United States it's called SEC, to regulate these kind of matters, especially among listed companies in the stock exchange, to make sure that investors' interests are protected. So this gives you a sort of a history, and the trigger point for all this regulation is Enron and WorldCom in United States. These two big scandals. You may think that with all these regulations being passed, and now tighter regulations, monitoring, that scandals would be, there'll be much less. But actually, there are still a lot of scandals coming up. In Malaysia, we have several cases already, and internationally, we continue to have such scandals, big scandals, and the amounts are getting bigger and bigger. Okay. Let's continue with the video.
Inquiry for Cynthia Cooper as internal auditor in order to avoid any unwanted issues raised by the employee. Furthermore, the board directors of WorldCom acted not more than a rubber stamp, as they did not establish any process or concern on accounting entries or operational matters, as they were detached from the working of company. Next issue that can be found in WorldCom is the incompetency of senior management team. During the time, WorldCom had already loaned Bernard Ebbers up to $400 million, and he used it to pay off his personal liabilities, which were secured by his WorldCom stocks. In 2000, when the stock started to decline, the senior executive refused Ebbers from selling his shares, as to their knowledge, it would depress the stock price.
So another common scandal is related party transactions. Transaksi dengan parti berkaitan, where the CEO or the directors, right, and the senior management also siphon out money from the syarikat and use it for their own personal gains, personal use. This happens very often in Malaysia as well. So in the 1MDB case, it's very interesting how this guy called Mr. Jolo allegedly has arranged for transactions with companies overseas to siphon out all the bond money. So when 1MDB raised money from the bond market, the billions of dollars, he set up shelf companies overseas and directed the money out. And it's quite surprising that Jolo is not even a staff or a director of 1MDB, but he managed to put his people inside there. And everybody seemed to have turned a blind eye on those transactions. For example, he made payments, or he allegedly caused payments of billions to a company called Saudi Petrol, but he changed the name to something like called Saudi Petrol NV, as opposed to PL. Then he set up a company with the same name, and although the name looks the same, they're actually different companies. So everybody signed off, including the MD of 1MDB, CFO of 1MDB, the legal counsel of 1MDB all signed off, and the money went over to his Jolo's private company. So the question asked is, are all these people who are supposed to be in there as key staff, are they blind, or are they being bribed, or are they actually being complicit in the whole case? Question mark lah. So now the case is before the courts. In fact, the legal counsel is back from Thailand. She ran away for quite a few years. She voluntarily come back to testify against our ex-prime minister and also against Jolo. So when times are bad, everybody turn the whistleblower to save your own skin. So related party transactions, like in Enron, also got related party transactions. The CFO set up certain partnerships that he is actually one of the leading partners, and then he had dealings with Enron, of which he's a CFO. So of course, when you have dealings, buy and sell assets, who will win? Of course, the partnership will win because he's on that side, right? And Enron will always be paying expensive, and his partnership on the other side will be always buying cheap lah. And then when they sell it back to Enron, of course they will sell it back the assets expensive. So in that way, he makes money. Is related party transactions. But what is surprising is that he actually disclosed this to the board of directors of this related party transaction, and it was approved by the board. Right, it was actually approved by the board and by the chairman and by the CEO as well. They recommended it to be accepted. So again, why was it the case? Why didn't the board stop it?
And further indicate a lack of confidence towards the future of WorldCom to the investors. With this, it indicates that large loan to senior executives could raise conflict of interest and breach of fiduciary duty, according to Moberg D in 2003. In addition, Scott Sullivan, the Chief Financial Officer for WorldCom, also had himself directed the staff to make false entries in order to mislead the public on the finances of WorldCom. The last issue that can be found in WorldCom is the inefficiency of external auditor. The external auditor during the time of Bernard Abbas was Arthur Anderson, who was responsible for endorsing the accounting irregularities of WorldCom. This happened due to the close relationship between the company and the auditor, which resulted in auditors did not report the fraud of WorldCom to the public. The audit team of Anderson also took the initiative as they identified WorldCom as moderate risk client instead of high risk client, and reported to the audit committee that there are no irregularities in the financial position of WorldCom.
The first discussion question is, what should be done by the auditors of the company to expose frauds and irregularities in the company? The discussion objective is to identify the roles and capacity of auditors in handling and finding the irregularities of accounting practices in the company. The literature review for discussion question 1 is the first law mentioned in section 266 of Companies Act 2016, which it mentioned the roles of auditors, especially in subsection 1. The auditor of company shall report to the members on the financial statements and on the company's accounting. The second one is Code of Ethics by Institute of Internal Auditors, which it mentioned for code of ethics, which is integrity, objectivity, confidentiality, and also competency. The third one is importance of the accounting principles, where it mentioned that corporations, non-profits, and government entities must prepare financial statements according to FESB, GAAP, and also AICPE. The fourth one is about the integrity and responsibility of auditors in the company in exposing frauds. The auditor should assess the risk of misstatement in the financial statements due to fraud or any mistake, and the auditors should inquire about any fraud or major error that has been found from the audited entity's management. The first application in this case study is some of the auditors exercised their power but did not adhere to their rules. For example, the external auditor, Arthur Anderson, brushed off the internal auditor, Cynthia Cooper, when she inquired the accounting firm about the deception of $3.8 billion, which is a fraud intended to increase revenues. The second application in this case study is WorldCom failed to follow the rules of accounting since they attempted to represent operating costs as capital expenditures. The rules of accounting will allow the auditors to trace any irregularities in the performance of the company. The third one is Cynthia Cooper, the internal auditor, ran her duty as an auditor by following the standards of behavior in the course of their work. For example, honesty and also her integrity by following the IIA Code of Ethics. She also exposed the accounting irregularities in WorldCom, and she did her own investigation despite being asked by her CFO to delay her works. The first recommendation of this case study is WorldCom should appoint a non-executive chairman as board of director. The duties of the non-executive chairman will include to manage the board's work, chairing meetings, and organizing the chief executive officer, and also board performance evaluations.
The discussion objective 2 is to identify the roles of the board of directors and management team over the internal control of the company. As for literature review 2, according to Companies Act 2016, director should exercise his powers for a proper purpose and in good faith in the best interest of the company. In brief, director's focus and action must be for the sake of the company. And if we refer to practice 1.1 MCCG 2021, it indicated that board should set the strategic aims of the company, ensure efficient usage of resources, and review management performance. Based on practice 1.1, the roles of board are not limited to monitoring and reviewing company's performance, but it involves directly in driving the company's success. Based on research paper made by Hillman and Daziel in 2003, it is crystal clear that apart from functioning as monitor, boards also have service role encompassing resource and strategy roles. Resource role is where the boards function to bring in resources that might not otherwise be available. This can be expertise, experience, and skills, and in form of external resources like connections or abilities of the directors. And for strategy role, it defines in which directors become active participant in strategy development. This is according to Scarius and El Nahla in 2020. In the application to case study 2, the first one is board's policy granting huge chunks of loans to senior executive. The boards of directors authorized loans amounting to 341 million US dollar. The large loans to a senior executive created conflict of interest and breach of fiduciary duties. Analyzed seen this loan as unethical and commonly sweetheart deals as it involving low interest rates. In these loans, WorldCom charged Airbus slightly more than 2%, which is a rate below that available to average borrowers. WorldCom also faced issue with board composition, which consisted of best friends to the CEO, Bernard Airbus. In 2001, The non-executive directors comprised more than 50% of WorldCom's board of directors, also known as professional boards. According to Dion and Tricky in 2005, and it is a superior in monitoring a company since their careers do not depend on the firm's CEO. They feel superior to express contradictory opinions against the CEO. However, this was not the case in WorldCom because these NEDs were not fully independent. They were best friends of the CEO, Bernard Ebbers, and executives from companies previously acquired by WorldCom. This was seemed to be very loyal to Ebbers and in turn received multiple perks, including millions of dollars in WorldCom stock, company's private jet, and financial support to various individual projects. The reason why WorldCom letting this issue slide was because they have the absence of nomination committee. Now let's move on to the recommendation. To begin with, establish nomination committee. This will help in substantially repeal the power of CEO in selecting new directors, like what happened in WorldCom. This is because the composition of this nomination committee, it will be comprised exclusively of non-executive directors that will create a majority whom must be independent. This is in line with MCCG 2021. And furthermore, the board committee must be independent in the true sense. In WorldCom, although the non-executive directors are named after the independent directors, but they are actually not. This is because they are the best friends to Bernard Ebbers, the CEO of WorldCom. The independent are just on the paper, but they are not in reality independent. Thus, this issue must be addressed by WorldCom. They must appoint a truly independent NEDs, as these independent NEDs will comprise the board committee and guarantee the transparency of board committee in WorldCom.
The discussion question 3 is, could integrity, accountability, and transparency of senior executives affect corporate governance? And for the discussion objective 3, to investigate how integrity, accountability, and transparency of senior executives affect corporate governance.
Assalamualaikum. My name is Muhammad Nakib bin Karudin, and I will be presenting on literature review 3, which is on corporate governance and accountability issues. So the first point is for the board, accountability is a key of strong corporate governance. So in general, the board accountability is assuming responsibility for all of the company's actions and communicating to stakeholders a fair, balanced, and intelligible assessment of the company's situation and prospects. Board accountability is well structured in listed companies, which must comply with the guidance for board accountability and the corporate governance code. For example, the MCCG 2021. Whilst not mandatory, the code should also be a useful resource for small and medium organizations to help manage risk and change behaviors of the individuals or within the organization. So it is also increasingly important for public sector and for non-profit organizations that strive to reduce risk and increase transparency. So, accountability requires transparency. Open, clear, and honest reporting will assist an organization create relationships with stakeholders such as customers, employees, and investors, as well as annual financial statements will allow the board of directors to communicate the year's result as well as document their performance evaluations. So, medium and large corporations are expected to provide a strategy report in which the board of directors present an objective, balanced, and clear assessment of the entity's development, performance, position, and future prospects.
the strategy report should be appropriate for the company size and complexity. It should contain key performance indicators, KPIs, to aid an understanding of the company's business for the period, and must also include the principal risks and uncertainties facing by the company. However, unfortunately, boards of directors frequently consider this reporting requirement as a compulsory rather than a pleasurable chore, with only the bare minimum of information provided. The report, on the other hand, should be thorough and clear, while also finding a balance to protect from information that is potentially economically sensitive.
Assalamualaikum. My name is Ahmad Faris bin Abdul Nasir, and I will present to you the second point of corporate governance and accountability issues. The second point is integrity, which is also a key element in corporate governance. The general definition of integrity is the quality of being honest and having strong moral principles. Jan Warren Duggar explained that integrity in corporate governance refers to the culture, policies, and leadership philosophy. A culture of integrity has to start at the top and be seen in the conduct and activities of the executives.
So based on the MCCG 2021 Principle C Practice 12.1, it is stated that the board ensures there is effective, transparent, and regular communication with its stakeholders, as well as MCCG 2021 Principle C Practice 12.2 stated that large companies are encouraged to adopt integrated reporting based on a globally recognized framework.
Issues of integrity is also mentioned in MCCG 2021. It stated in the Principle A Guidance 1.1 that all directors should objectively discharge their duties and responsibilities at all times as fiduciaries in the interest of the company. All directors must act with integrity, lead by example, keep abreast of his responsibilities as a director and of the conduct, business activities, and development of the company.
So let us continue to the application of the case. Bernie Ebbers, the former CEO of World.com, was charged with fraud, conspiracy, and making false statements in connection with the accounting errors that led to the company's demise in March 2014. Former Chief Financial Officer Scott Sullivan had already agreed to plead guilty to similar charges and testify against his former boss. World.com's demise was caused by a slew of fundamental problems and flaws. To begin with, one may point the finger at the market system for basing a company's value primarily on its share price. As a result, circumstances arose where a firm may act in an unwelcome manner. Investors and the market were infected with greed, anticipating and demanding further high profits. Ebbers, who owns a large number of WorldCom shares, may have been overtaken by this, but as CEO, he is also responsible for promoting and acting in the company's best interests, and this is where he violated his fiduciary duty to all owners and stakeholders. Another underlying cause of WorldCom's demise was its culture, which was seen in all sections of the corporation, but was largely carried down the ranks from top management, starting with Ebbers. This culture also attracted shady commercial dealings, such as the appointment of Salomon Smith Barney. Only after allocating huge quantities of shares in a planned IPO to the executives, which might be regarded as a bribe, only then did Smith Barney become and retain WorldCom's investment banker. The audit committee and the rest of the board not only failed to resist Ebbers and his CFO, Scott Sullivan, but they also provided substantial loans to Ebbers and others. As a result, Ebbers was free to pursue other interests, including forming and running other businesses with the help of WorldCom loans.
The third recommendation is building and maintaining an effective governance infrastructure. Since the board is ultimately responsible for all of an organization's actions and decisions, It must have certain rules in place to guide organizational behavior. It is also crucial for the board to adopt delegation procedures to guarantee that the line of duty between the board and the management is clearly defined. Processes and procedures are also included in this topic. Poor internal processes and procedures can lead to inadequate access to information, poor communication, and uninformed decision making, resulting in high level of dissatisfaction among directors. Enhancements.
So what this presenter is talking about is the code of corporate governance. So Malaysia got this code of corporate governance called Malaysian Code on Corporate Governance 2021. Is that this corporate governance is a set of best practices, and it has got three basic principles. So the first principle is effective and balanced board of directors. Number two is effective risk management and audit, and third is meaningful communication with stakeholders. Meaningful communication with stakeholders and reliable corporate reporting. So the Malaysian Code on Corporate Governance has got these three basic principles that we will study in the next class lah. In your pembentangan, the pembentangan that we're going to do, that you can form a group to do, is based on this checklist of three basic principles, supported by each basic principle has got best practices. There's a checklist, so you can do an audit on a company that you choose, and then you can report back in your pembentangan whether this company has passed fully or partially passed, depending on your score, or whether it has failed in this corporate governance checklist. You can choose the company that you want. It can be WorldCom, it can be Enron, or a Malaysian company. Last year, a lot of students choose this company called Transmile, which is a Malaysian company that went bankrupt more than 10 years ago. So it's up to you to choose, if you choose Enron or WorldCom, I mean, a lot of work already been done, so you more or less know the answer, right? So building effective governance means corporate governance.
To board meeting processes, meeting agendas, board papers, and the board's committee structure can often make the difference between a mediocre board and a high-performing board. In conclusion, the lack of board composition have encouraged opportunistic behaviors of executives and also auditors overseeing the fraudulent reporting.
So there's a saying that if you leave a monkey in charge of a banana plantation, you will know what happened to the bananas, right? The monkey will steal all the bananas. So that's why you need a farmer to be in charge of the monkey, with a kind of a leash on the monkey, so that the farmer can control the monkey. So you can say that the CEO is like the monkey. If you don't control that monkey, then all the bananas of the corporation will be gone. So this is the idea of corporate governance, that you have a set of ethical practices and check and balances being put in the code, of which I mentioned there are three basic principles, which is a balanced and effective board of directors. Number two is effective audit and risk management, and number three is meaningful engagement with stakeholders and corporate and the effective reliable corporate reporting. So it's important to set up an effective corporate governance structure, which we will study in the next class on the Malaysian Code on Corporate Governance.
It may affect the company's reputation. Moreover, accountability and integrity needs to be emphasized in order to avoid conflict of interest, which is the reason that setting up an effective corporate governance could have avoided or minimized these issues. Thank you. That's all from us.
Okay, I hope you're enjoy that. Okay, can you just put on your camera for about 2 minutes so that we can record your that you're physically there. Just put on your camera for a minute or two. Okay, the rest, just put it on so that we can confirm. Hi, good morning. Good morning, Pritam. Good morning.
Good morning, sir.
Good morning. The rest, not enough bandwidth, is it? Cannot connect. Hi, Zul.
Hi, sir.
Good morning. Okay, we will do the quiz together lah. You can hand it in later. You must get your notebook ready. If you open up the one I send you WhatsApp, you know, the quiz, right? Come out. The first part is actually you're talking about Akta Syarikat lah. So Akta Syarikat, basically, if you buy from the bookstore, is this thing. You don't have to buy lah. But there's a soft copy in your WhatsApp. You can open up. It's in other bahasa than English version. You can open up. So in here, this Akta 2016, there is a section on financial statement and auditor. Financial statement auditor. So your job is to condense it because it's very thick, right? A lot of jargon or whatever. So the idea is to, if we can condense a thick thing to something like 10 pages, then you're better able to internalize and understand and faham better, right? What is the Akta Syarikat on financial statements and auditing. Now, if there isn't, hello, there's a young student there. So if there's no Akta Syarikat, nobody will ever do financial statements, right? Because it's not no requirement. So the accounting standards and the reporting will be down the drain. Nobody bothered to do. But with Akta Syarikat, is wajib setahun, once a year, all the company syarikat must have their financial statement audited, right? So that they can present these accounts to the bankers, to creditors, investors, and bankers will always ask for this, audited accounts. Who else will ask for this? Income tax department. First thing they ask for you is, give me your audited accounts. So income tax also insists on having this lah. So this is very important. The soft copy is in your WhatsApp. Okay. If you open up, the Akta is something like 595 pages. 595 pages. This is a relatively new act, 2016. The old one was 1967 or something like that. Sudah lama. So they amended this act. Now this act, if you can master this act as a lawyer, you can cari makan already. Because a lot of loopholes and sections in there that a good lawyer can use, right? So there's a Malay version, there's an English version in your website. So today's assignment, or the quiz, we call it, if you got your soft copy ready, you must all open up and do it today together. Because I know you do it home very susah. Got to work and everything. So today we try to make it like a workshop. We do together. Okay. So your job is to condense this the act, which is on financial statements and audit. So if you look at your act, I can tell you that the accounting section on financial statements is on section 243. In your soft copy, you can see it. All right, it's in section 243, 243 to section 261 is all on financial statement. What is financial statement? Because auditors need to audit financial statements, right? So you have to know what is a financial statement. Okay. Then auditor is from 262, section 262, 262 hingga 289. 289. Okay, I think more than 100 pages. But today's job for you all is to condense that to about 10 pages in simple Bahasa or simple English, because lawyers and all the legal profession have a habit of doing macam jargon. The simple thing, they got many words, but you can actually simplify it to a few sentences, and you know the meaning lah. That's the purpose of today, to help you all to do this. At the same time, you do your bentangan lah. So you got a notebook in place. We can run through that. We will try to condense these sections either from 243 hingga section 289 to about 10 to 11 pages condensed, so that you look at it, you can tell your boss, I know about Akta Syarikat, right, on financial statement and juru audit. Okay, now let me share. Okay, how to answer this question is, you can do in table form. You can do in table form, or you can do in essay form, up to you lah. But don't have to be long-winded. The purpose is you need it to be shortened so that you can understand. If you can condense it, then it's good. That means you can faham. So, and Akta Syarikat is important. Why? 2016, because if you have effective Companies Act and monitoring, you can prevent frauds like Enron, WorldCom, yeah, or even the GIIB. If we have effective effective Companies Act and monitoring by juru audit, right? Monitoring by juru audit and the authorities, then you can minimize. You can minimize all these fraud cases that you read about every day. So let's have a look at how to do this. Let's do it together. If you got your answer, should be in Microsoft Words, don't PDF, and then you send it to, I already post an email link to auditingclass@gmail.com. You can email to me at that address. Your answer, basically about 10 pages, around there, to condense it. We'll do it together, how to condense it. Yeah. So the first question, if you open up your link, the WhatsApp is asking you to comment on Akta Syarikat on the financial statements and the juru audit section. So let's look at how we can tackle this together. Okay, boleh nampak the slides? Can see or not? Describe the audit and financial statement section of Akta Syarikat 2016. So you can either take a screenshot or your camera. Do not copy exactly the same answer, but you can actually condense further from here. So we already condensed from maybe 100 pages to 11 pages, 13 pages. Can you condense that further to 10 pages? In your own words lah. So let's have a look at the Akta. If you open up your Companies Act, right, you'll find section 243 first, under financial statement and reports. Now 243 basically is an interpretation. So it refers to the Financial Reporting Act 1997, and also the meaning of what is approved accounting standards and subsidiary. This is what it means lah. But if you look at the actual act itself, 243 is very long-winded. So if you summarize it, 243 basically means that it refers to the Financial Reporting Act, asks you to refer to Financial Reporting Act 1997 for the meaning of approved accounting standards and subsidiary. You can start keying in your answer into your words template now, rather than leaving it for later if you can. If you got a notebook, stand by. So 243 refers what's the meaning of approved accounting standards. Now in Malaysia, you cannot do freestyle for accounting one, you know. You must follow approved accounting standards, which is issued by the Malaysian Standards Board. It's called MASB. So MASB is a statutory body. Their function is to issue accounting standards. So everything you see in a financial statement that is reported, that's in the by listed company, is standard format, and they all must follow what is in the approved accounting standards. So every item, line item in the balance sheet P&L account, there's approved accounting standards. Okay, so that's interpretation. Now what's 244? 244 says that whether you are the private atau public syarikat, penyata kewangan mesti mengikut the approved accounting standards and circulate to its members. Okay, that's the answer. There's no need. If the director feel that if they follow this accounting standard, it may not give a true and fair view, it's very rare, then there's no need to follow, but you need to disclose the reason and give particulars on the effect if the accounting standards will comply with. Okay, so they say you should follow accounting standards, approve accounting standards. But if you feel that by following the accounting standards, the director feel kalau mengikuti accounting standard, the report will not give a true and fair view, then you don't need to follow, but you need to disclose the reason why in the accounts and give the effects and give particular on the effect. If you follow the standard, this is your answer. If you don't follow the standard, this is the answer. Okay, so you still need to disclose the figures if you follow the standard versus the figure that do not follow the standard. The approved accounting standard will prevail when there's conflict with this act. Okay, so the approved accounting standard will take precedence over everything. 243, 244. Any questions so far? You can unmute. Can you hear me? Audio is okay?
Yes, sir.
Yes,
Okay,
sir.
good. Okay, what is 245? Section 245. What are the accounts to be kept? The accounting records and the relevant supporting documents should make entries within 60 days. 60 days, you must make the supporting document record. 7 tahun must keep. It may be kept in the offices or other places. Record can also be scanned and kept in Malaysia, but should be available for inspection upon records of operation outside Malaysia. No need to keep here, but it should be available for inspection if somebody requests or the government requests. Kalau tidak, boleh di-charge. The officer and syarikat boleh di-charge in court. There is a fine not exceeding 500,000 ringgit or free holiday at maybe Kajang together with ex-Prime Minister, not exceeding 3 years. So quite tough, 3 tahun. If you don't keep record, it's 3 tahun. You'll be charged and found guilty. Or kedua-dua, kena the fine and kena the imprisonment. So accounting records and the relevant supporting documents should make entries within 60 days. Okay, and be kept for 7 years. May I remind you that there's this thing called e-invoice. E-invoice coming up. E-invoice is a thing in August is coming up, and then by next year it's applicable to everybody. That every invoice you want to issue have to be cleared or verified by the income tax department via this online system. or my invoice, I think, where every invoice raised must be validated by income tax. And once it's validated, the QR code and will be assigned. So the records will be already online, So auditors will find it very easy to audit because everything now, on as far as invoice is concerned, is already online in the cloud. There's no escape. Okay. So nowadays you can create fictitious invoices to boost your profit. For example, GIB, I suspect what they did was they inflate the profit. They just pass the journal entry, debit debtors, credit sales, say 10 million. So you inflate your sales by 10 million, and since there's no cost involved, you inflate your profit by 10 million just by passing a journal entry. But now with the advent of e-invoice coming in by next month, all these records on genuine invoices can be checked by anybody, by auditors online, right? So if you create a fictitious invoice, you need to be validated by income tax, right? So income tax have a list of things you have to fill in. There's about 50 parameters you have to fill into the form to be validated by income tax. You need the income tax file number of the other party, the counterparty, the address, the business, the nature of transactions, all the details you key in. Then you send the income tax. The income tax will validate, and then once it's validated, the validations will be sent to both the buyer and the purchaser, the buyer and seller, sorry, and sent out. So that means you cannot create fictitious what do you call it, documents anymore, right? So in your answer for exam, if you ask what are the things that can prevent fraudulent accounting, so as far as inflating of sales is concerned, with the advent of e-invoices, it will lessen the probability. It still can happen, still can happen, but it will lessen the probability of creative accounting via inflating sales or turnover by fake or false journal entries. Okay, so because auditors can easily check whether it's real or not by looking back at the income tax records, and there's a QR code for every invoice where they can scan, and once they scan, they can actually see the details of that invoice. So one thing good about that is that the income tax via e-invoicing can help to prevent inflating of sales and profit. Now you want to take a snapshot of this, or you might want to quickly key in these answers. You can do it in table form or essay form. It's up to you. Dalam bahasa atau English. So you can quickly key in the information. All right. What I do is I give you maybe 10 minutes. You go and draw the table in your Microsoft Word, your laptop, and you can do it like this, or you can do it by words. Just say 243 is what, 244 is what, 245, 246 is what. Okay, 5 minutes for you to get started. Let's all do it together in class. Do it together in class. Yeah, give you say 10 minutes. 10 minutes. You go and open up your computer. Maybe you can keep a window open for this class, right? Open up your Microsoft Words. Do a table. I think table is probably easier. You just have to go through the sections and then just fill in the answers. You please don't copy exactly what you see here. If you can condense even further from here, it's even better. So 243 is interpretation, 244 is compliance, 245 is accounts to be kept, and 246 talks about kawalan dalam, system of internal control that all companies should have internal control system to prevent loss from unauthorized use and to make sure that the transactions are authorized and recorded in a true and fair view. On conviction, director is liable to a fine not exceeding 1 million ringgit. That is a lot of money, my friend. So if your syarikat don't have internal control, you may be charged in court. And on conviction, pengarah. Notice is pengarah, not as far as Companies Act is concerned. It's a pengarah that's liable. But you're talking about Capital Market Service Act. The CFO is also liable under Capital Market Service Act. There's another ACTA for listed company. Okay. So on conviction, director is liable. Pengarah, liable to a fine not exceeding 1 million, or imprisonment not exceeding 3 years or both. 3 tahun. Accounting record not kept, also 3 tahun, not exceeding 3 tahun. But in US, it's 20 tahun. United States. So quite a big difference in the United States. In the case of Bernie Madoff, the Ponzi scheme case, Bernie Madoff, the guy who was responsible for the Ponzi scheme, was sentenced to 150 years of jail. So there was a cartoon that shows that he was brought to the jail, the warden locked him up in the cell and then threw away the key because he will never come out alive, because when he went in, he's already about 70 or 80 years old. So in US, you kena jail is a long, long time. Malaysia very kind. Malaysia only 3 tahun. 3 tahun very fast, like doing a diploma like that. Can finish. Okay, I'll give you 10 minutes. You take out your notebook, open up your Microsoft Words. Start to key in 243, 244, 245, 246, 247. Cannot, boleh. Go and get your cup of coffee at the same time. Today is a workshop day. We do together, okay? Because I know that it's difficult to do it when you go back home. So drop your table, key in 243, 244, 245, 246, 247. At least key in the top part: interpretation, compliance with approved accounting standards, accounts to be kept, system of internal control, accounting period of companies within the same group. Type in. Once you finish this, you can email to me at the what I've shown in the WhatsApp, auditingclass@gmail.com, and do it in Microsoft Words. Don't PDF it, and then remember to put your name on top, student number on top. Yeah. Today is a workshop day, so we do it together in class. In about 5 minutes time, we'll move on to the next section. So yes, please.
So I have a question. We are going to discuss until section 289.
We will try to. Yeah, we'll try to. So that we want to do it together in class, because you want to do it at home. I know it's susah lah. So we do it together in class today. So open up your Microsoft Words. Yeah, at least have the structure there. Yeah, I think this is probably the most effective way to do it, is log a table. You can do it by essay form if you want to. If you wish to do it that way, it's fine, no problem. But with the table form, it's easier lah. The idea is that the act itself for this few section is more than 50. Yeah, 60 pages. So you can condense, we have condensed it to 13 pages or 10 pages. If you can further condense it to 10 pages, that means you must be good to do that so that you can really understand what those sections are. So financial statements is until until 261. Okay, 261. Then 262 onwards is about auditors. What are the power of auditors? What are the ways to appoint them? Yeah. So all these are governed by ACTA. There's no option, it's compulsory one. Must do. So you can go back and tell your boss, you're now expert on ACTA Syarikat. And then you may notice that certain things he did do not follow ACTA Syarikat. You better tell him to follow because there's penalty. So you can see that if he doesn't keep accounts, the company and officer, this one not director, 245 is on conviction. You can see on conviction, the company and officer, that means you, you're the finance officer or the finance executive, boleh didenda 500,000 atau penjara atau kedua-dua 3 years. Now, internal control, your syarikat don't have internal control system to prevent loss. That means very careless, don't lock things up, don't have any manual, don't have any control over checkbooks and everything very, what do you call that? Very careless type of conviction. The director, this one pengarah not the officer, boleh di penjara atau denda, right? 1 million atau 3 tahun. So if you're a director of a listed company, for example, like Tenaga, or Maxis, all these big companies, if they find that you have not put in place kawalan dalam yang sesuai, you boleh kena from the authorities, from maybe Securities Commission or maybe from the commission, companies commission. To drop a table, 243, at least type in 243 last. 244, 245, 246, 247. So in exam, you'll be asked questions also like, what section of Akta Syarikat can prevent fraud? So you can say that, you can mention some of this. For example, accounts to be kept, you can talk about kawalan dalam, So all this will encourage reliable reporting to prevent fraud. And then you can also mention with the advent of e-invoicing by Lembaga LHDN, right? This will also promote more clean reporting and do away, will try to prevent a lot of these creative accounts issues. Next time we'll move up to other sections. Why they put the word true and fair view rather than in an accurate manner? Sometimes your figure may not give a true and fair view. So the overriding fact is that you must give benar dan seksama, true and fair view. It's not like trying to tell you that your account must be accurate to the last cent, the last dollar or something like that. So generally is to say that your transactions are authorized and recorded in a true and fair view, benar dan seksama. So there's an overriding view that your accounts must be true and fair. So it may be slightly out, it doesn't matter. So habis, if you haven't, you just take a quick snapshot of it so that you can finish off. But at least draw up the table to have the sections feed in 243, 244, 245, 246, 247. You have the structure in place to key in the answers. Okay, now we move on. Section 247 and 248. Accounting periods of companies within the same group should have the same balance date. So if, say, I have a company, balance date is 31st December, and then I bought the company buy a subsidiary of a new subsidiary, balance date is 30th June. So obviously different balance date, right? So under Akta Syarikat, the holding company should change the subsidiary to its own balance date or the other way around within 2 tahun. Okay, 2 tahun. So your answer can be very short lah, rather than write a long story. You can just key in this answer that the financial, you don't have to actually write the whole thing lah. This will be quite okay for answer. You can say that the financial, okay, so the financial year of a company, subsidiary company, must coincide with its holding company. When the company becomes subsidiary of a non-foreign holding company, the financial year should coincide within 2 years. I think that's good enough. Good enough as an answer. The rest, I think no need lah. Here it said that any director who contravenes this section commit an offence, but there's no punishment stated for this section for some reason. 247. So how to punish this fellow if he doesn't do it? 247. The actual act itself is very long, but I think if you can condense it to what I shaded, I think it's good enough. So 247, you can say this is the answer lah. The rest is like if you want to appeal, you body appeal, that kind of thing lah. And then your answer, maybe you can mention that any director who contribute to section commits an offence, but there's no punishment stated. Maybe you can kena compound. Or maybe they forgot to put in a punishment. Okay, 248. Director should prepare financial statement, not the CFO, not the accountant. The responsibility is actually the director. Of course, the director can hire the CFO, hire the accountant, but liability basically falls on the director to prepare financial statements. He can delegate it to somebody to do it, but ultimately he's liable. And I think your answer can be this one. I think have to be the whole thing lah. So directors will prepare financial statement within 18 months. If it's a new company, you form the company today, you are the 18 plus bulan to prepare accounts. And then after that, within 6 months of financial year, you must prepare the financial statement to be audited and then released. So if your balance date is 31st December 2023, and it's not a new company, it's already a company in existence for a while, you need to prepare your audited accounts by 30th June 2024. Okay, and if you're a listed company, you have until September, end of September 2024 to prepare laporan tahunan, annual report. So these are the timeline. You can copy that answer down. I think directors should prepare financial statement within 18 months from incorporation and subsequently within 6 months of the financial year. And say the financial statement shall be audited before being released. Kalau tak jadi or tak buat, kena charge and kena convicted, pengarah, not the CFO, pengarah liable for a fine not exceeding 500,000 or imprisonment not exceeding 1 year or both. This is for failing to prepare financial statement within 6 months lah, if it's the existing company. Okay. So habis, give you 5 minutes. 247, 248. 5 minutes. So for this 247, no need to copy the whole thing lah. I think just this is fine for answer. You can shorten the words, no need to put all the words here. You can put the director should prepare financial statement within 18 months of incorporation or within 6 months of financial year. Okay. And need to be audited before it's released. Then you put down there maybe bracket punishment, pengarah boleh denda 500,000 atau penjara setahun. Kalau you want to use BM lah, bahasa. 5 minutes to do this. So you've already done a few sections. We're already on the way for this quiz. I think it's worth 20 marks, isn't it? Yeah. If you're using a laptop to attend this, then you can open up another window to Excel to do it. Sorry, a Word to do it while listening in. Few more minutes before I move on to the next section. Somebody very fast, already done already, yeah? So Firdaus has done the Bahasa version and sent in a section of it. Good. Keep it up. It will save you a lot of time from having to do it at home. So don't wait to go home to do it. You must well do it now. Open up your words and start keying in the sections. Yes.
Regarding to my answer, I give
Yeah.
it to you.
Yes.
Okay.
This Firdaus,
Is it?
is this Firdaus?
Yeah,
Firdaus,
yeah.
yes.
I'm Fidaus. Right.
Yes.
Is it okay or I just need to add tambah untuk dia punya setiap akta syarikat pada setiap jawapan?
No. Yeah, I think what you did is fine.
Is it
boleh.
okay?
Yes, can.
Boleh diterima?
Boleh. So just
So
continue.
I don't
You
need
haven't
to change.
No need to change.
Yeah.
Just do as you are.
No need to change.
Yeah.
Alright.
The idea of this whole session is you boleh faham akta syarikat in a simplified everyday language. Because kalau you look at akta syarikat, pengsan, it's all
correct.
dituliskan oleh lawyer. So what I want
Betul.
is you're basically boleh faham in simple English what to tell your boss, akta syarikat, so that you won't get into trouble next time because you know your akta, right? So your boss asks you to do something very bahaya punya, you basically will know lah, it's a red flag, right? So you can either tell your boss, ada penjara, ada denda. You can show your boss the akta syarikat, your soft copy,
Betul.
because sometimes your boss
lagi
never read also. Your boss never read also. Boss doesn't know. Yeah.
Tapi lagi bagus kalau saya letak setiap akta, nombor-nombor akta tu kan.
No. You just do. What you're going is fine. But I already sent you the soft copy of the akta, right? So you want to know the section, you boleh refer to the Bahasa version atau the English version. Yeah.
Alright.
Okay.
Thank
good.
you, sir.
Okay. Continue. Okay. Now we will move on to section 249, 250, 251, 252. Right? So 249, general requirement bagi financial statements must be consolidated financial statement should give a true, that means when you audit the financial statement, it must be the company and the family lah, kumpulan, syarikat dan kumpulan. Both the company and the kumpulan must give benar dan seksama, true and fair view of the financial position of the company. The notes to the account should include director remuneration, retirement benefit, compensation, loss of office in favor of directors. So you can say in your answer, accounts must give benar, true and fair view lah. True and fair view is the answer. And the notes is also part of the accounts, Notes to the account is also part of the account. And it must show directors' benefit as well as auditors. Why they want this requirement? Because auditor is a goalkeeper, right? Director is a pilot. So they want the shareholder to know how much you pay the director and how much you pay the juror audit. It's a very important disclosure item for shareholder to monitor. Then 250 says that the consolidated account should include all the subsidiaries dan kumpulan. You must include all the subsidiaries in the consolidated accounts. If a director failed to take reasonable steps to comply, then it's an offense. But sometimes 250 you cannot help it, because if the syarikat is incorporated in say Gaza, it's susah to go there to get accounts, right? If you've got subsidiary there, so you may not include that subsidiary because you cannot get the accounts, because the reason is that it's in a war zone. So you have to disclose in a note account that you did not include this subsidiary kerana in the war zone in Gaza, for example lah. So you cannot have that. You disclose in a note, that's fine. Or the company is incorporated in Africa, Madagascar, for example, and that country tidak ada requirement to keep accounts and you don't have auditors there to audit. So disclose the reason lah. So subsidiary supposed to be included in the consolidation of the financial statement. This is your photograph. You take a photograph of yourself you also required to take a photograph of you and your family. So your family are your subsidiaries lah, anak-anak syarikat. 251, very interesting. Financial statement to be approved by the board. So at the annual general meeting, a lot of things are given to the shareholder for approval. For example, appointment of auditors, directors' fees and remuneration, maybe related party transactions, dividend to be paid. All these are to be approved by the shareholders. But when it comes to financial statements at the annual general meeting, it is stated that the accounts or the financial statements are not to be approved by shareholders. It's only to be presented to the shareholders. But the shareholders can ask questions. So the board is basically the responsibility. The financial statement are the responsibility of the board of directors and approved by the board. Okay, so it does not require approval from shareholder at the AGM, annual general meeting, for the financial statements to be approved because it's already approved by the board and that's final. And it must be accompanied by a statutory declaration by one of the board member. Okay, one of the board member should make a statement also by statutory declaration that the accounts follow applicable approved accounting standards to give a true and fair view, and signed by at least 2 directors. Okay, signed by at least 2 directors. In case of a sole director, by the director and attached to the financial statement. If you do that, every director, not one director, every director is liable to a fine not exceeding 500,000 or imprisonment not exceeding 1 year or both. So very heavy penalty, heavy penalty. So shareholders are safe. Shareholders don't have to approve the account.
Sir?
Yes.
Sir?
Yes.
I got a question.
Again. Yeah.
I'm working right now.
You're
So,
working.
yeah, I'm working right now. So, when is the deadline for me to send this?
You have until next week, to do this. So if you're working today, you just maybe take a snapshot of this, or you cannot be taking a snapshot because you are working. You're at the office now, so you are just listening in only lah.
I only can listen.
Sorry?
I only can listen.
Okay, that's fine. I'll tell you what. I'll make available a video recording of this lah, so you can see this again. You have time. So, but I'm trying to encourage all the others to do it today, so you don't have to do it. But you have no choice lah, because you kerja hari ini, bukan?
Yes, sir.
Okay, all right. You can rewatch the video recording later lah. All right. So basically so you can follow, you can listening first lah, but you cannot join us for the rest of the other participants. Please do it today, right? Rather than waiting. But Zam, is it Zam? Is it Zam? So
yeah, Zam.
Zam. Okay. For Zam, no choice lah, because you're working today. So you try to do it during the week lah. Yeah. Yeah, and do it in Microsoft Word. Don't PDF it and send it to auditingclass@gmail.com. Okay.
Thank you so much.
Okay, so this is listening. Okay, so 249, 250, 251. Okay, let's move on. We have 252, 253, 254, and 255. So just type in the sections. Director should prepare director's report. I think for this, you just have to type in this answer lah. Director of a company should prepare director report approved by at least 2 directors. Okay. I think you should always include punishment in your answer, because then you can tell your boss that if you don't follow this, what you will kena lah. Now this punishment got 2 part one, got 2 part. So director will fail to do this, will kena jail for 1 year, 500,000. But if you are the accounting officer, accountant, or account executive, you fail to have boss approval and director's signature, you only kena fine 20,000. So please note that if your boss refuses to sign, okay, the director's report, don't think you're free. Although your boss will go to jail, if kena convicted, you yourself may be subject to a fine of 20,000. So your boss don't want to sign out, better resign from company. Okay, I think to cover yourself is maybe you send an email to your boss that, can you please kindly sign this director's report by such a date, right? By such a date. Then send a reminder. Now, if he doesn't sign, and the deadline is over, is it safe for you to keep quiet? Is it safe for you to keep quiet? I think it's better for you to whistleblow kalau this happened, to just report to the Securities Commission. It's a listed company. If it's a private company, maybe you just whistleblow to the company's commission, SSM, right? Just whistleblow and tell them, please don't disclose your name, because there is a punishment of 20,000 ringgit fine if you're the officer and the word is you have failed to have the board's approval and the director's signature for the director report. So when you look financial statement, there's a financial statement, you got kunci kira-kira, penyata pendapatan, then aliran tunai, then owner's equity statement, then you got nota-nota to the accounts, yeah. And then after that, there's a requirement for report dari pengarah, called director's report. So after syarikat require this report to be also tabled and prepared, yeah, and attached to the financial statements. So kalau your director don't sign, you may think that okay, it's okay with me. It's only you go to jail. But in this section, there's a section that say that you also can go in, being punished, but you pay a fine of 20,000. Can you claim this 20,000 from a company? Can you claim this 20,000 from a company? Later you tell your boss, I'm going to claim from petty cash 20,000 or 10,000. Maybe the judge give you 10,000 only lah. Can claim from the company petty cash, or ask the company issue check to you. You tell your boss, this is not my fault. I asked you to sign, you don't want to sign. Now I can also, and the company please reimburse me. How many seconds? Sending one to your Q&A. Those who say they can claim from the company the fine as an employee can type 1 in the Q&A box. Today I think it's working a Q&A box.
Yeah, is it okay? It's
Can claim.
can claim.
Let me see the quiz. How many say can? So a lot of you say can claim, huh? I hate to disappoint you that under the law, anything to do with infringement, fines, even traffic offense, all these things, tidak boleh claim. Sorry, cannot claim. You have to come out from your own pocket. Yeah, your own pocket. But of course, if the boss reimburse you from outside the company, then nobody knows lah. All right. But under corporate governance, under Akta Syarikat, under listing rule, CMSA 207, if you are charged with anything pertaining to fraud and all those things, even those things, you cannot claim unless you win the court case. You are proven to be not guilty, then you can get a reimbursement. So if you can now the fine 20,000, you appeal to the court, and the court say you are not not liable, not guilty, then maybe you can get back a refund. Okay. So if you don't have such a court appeal, basically you bear this penalty yourself as an employee. You pay the fine. Okay, contents of the director's report 253, the name of every current and past director from the commencement to the end of the financial. So during the 1 year, who are the current and past directors? What is the activity of the company, including subsidiaries? So if your company is trading, for trading like property development, you put property development. If the company do property development, the subsidiary do contracting, then you disclose accordingly lah. Or subsidiary do food business, you do engineering business, yeah. And matters set out in the fifth schedule. Fifth schedule is Akta Syarikat. If you look at the back of the act, right, there's a schedule. Behind the Acta, there's a schedule. So I'm just looking at the schedule. So I'm looking at the fourth schedule now on page 566. It's at the back of your Akta Syarikat. There's this schedules 1 to 10 schedule, the 9 schedule, many schedule here. I'm just running through 8 schedule. Then you got 7 schedule on the power duties of nominee for corporate voluntary arrangement. 6 schedule power of receivers and receiver manager. So if company kena bungkus, what's the power of the receiver? It's in 6 schedule. This is what? Schedule, 5th schedule, running to the 5th schedule to see what's in the 5th schedule. 4th schedule is the approved bodies. What are the approved bodies in the Malaysia Akta Syarikat is the MIC, Malaysian Institute of Chartered Secretary and Administrator. Number 2, Malaysian Institute of Accountants. Number 3, Malaysian Bar. Number 3, Malaysian Association of Company Secretaries. Number 5, Malaysian Institute of Certified Public Accountants. 6, Sabah Law Association. 7, Advocates and Association of Sarawak. These are the approved bodies by Akta Syarikat lah. So in Malaysia, you cannot call yourself an accountant unless you are a member of the Malaysian Institute of Accountants. You cannot call yourself a lawyer unless you are a member of the Malaysian Bar lah, and so on. Now, to be a company secretary, you need to be a member of the Malaysian Association of Company Secretaries. But if you are a member of the Bar, Malaysian Bar, Malaysian Institute of Accountants, Malaysian Institute of Chartered Secretaries and Administrators, I believe also Sabah Law Association and Advocate Association Sarawak, you can become a company secretary as well. So it's quite useful to have a MIA member, okay, to be a company secretary. Now, what is the 5th schedule? 5th schedule is a specialized schedule on director's report. Okay, so it specializes, it detailed on here in schedule 5th schedule, all the details, very long. Very long, Pengsan. How many pages? 1, 2, 3, 4, 5, 6, 7, 8 pages of what need to be disclosed in the director's report. You don't have to do that. You're lucky, yeah. So in your answer, you just say that. The director's report need to contain the name, principal activities, and just say matters mentioned in the 5th schedule. Just say set out in the 5th schedule. I think that's good enough. So your answer, shorten it. Ini I think cukup for this section. So contents of the director's report, you can say shall contain name of every current and past director from the commencement to the end of the financial year. B, financial principal activities of the company, including subsidiaries, and matters set out in 5th schedule. That's cukup. Now, 254 talks about forms and contents of financial statement of a banking. I think this one, you just say that director's report have to follow Bank Negara, have to follow Bank Negara requirements. That's enough. So for 254, you say that the director's report and financial statement should follow bank requirements, Bank Negara requirements. That's enough. Form and content of director's report for banks. This one basically is financial institution, insurance company, for example, Takaful, RHP Bank, Maybank, all those things lah. Those banks, in addition to following Akta Syarikat, they also need to follow Bank Negara requirements. So just put Bank Negara requirements for 254. 255, relief from requirements as to form and content of financial statements and director's report. Sometimes preparing accounts may result in the accounts being not true and fair. You can apply for exemption with the SSM. So directors may apply for an order not to prepare accounts if preparing accounts may not give a true and fair view. So your answer, I think you just say that you may apply for an order of not to prepare financial statements. You can apply lah. You can apply. I think that's good enough. Now, when would such a situation be relevant? Maybe the company got a lot of subsidiaries overseas in countries that you cannot get reports, so very difficult to prepare accounts. There was one case in Australia where the whole management team of a mining company that's listed in Australia Stock Exchange was flying to the mining site to visit the mining site. Inside there were the whole board of directors, the CFO, CEO, key staff, and the plane crashed. The plane crashed on the way to the mine. So all died on mampus. Meninggal dunia. So how to prepare accounts? Because everybody that's supposed to know about accounts, including the CEO and even the board of directors, all died. All right, all died. So they cannot prepare accounts. So they apply for exemption to not prepare accounts for the year lah. Good reason. Now, what's wrong with that? All die in the same flight. So for risk management, some company have a policy. Pengurusan risiko is one of the key cornerstone of good corporate governance and risk management, right? Internal control. Part of it, internal control, is that key management team should not all travel on the same flight. So there are some companies like last time Malaya Cement, Nestle. They have a policy that management team, if you're going for a meeting, they should at least separate the management team into two parts and travel by different flights. So that in the event anything happens, at least half the team is around to solve the problem. So never send your whole management team in one flight, right? Because if anything happens, it's your problem. So this is real life, it happened. So now this for risk management is they say that management team should go to a place in two different flights. I think in United States, you find that usually the president and the vice president don't appear together at the same function. Usually, why? Because if there's a bomb attack, you kill both the president and the vice president, then there may be nobody left to run the country, right? So if you notice, as a matter of risk management, they do not usually appear together. They appear separately. Yeah. Okay with 253, 254, 255. So for 255, I think just this dark place is enough lah. 256. The power of registrar to require a statement of valuation of assets. Why is this section required? Okay, so for this, the answer may be in the dark area. The registrar may request for a statement of valuation at current value of assets and liabilities of the company within the time specified in the notice. Why would the registrar or the SSM want to do this? See, a lot of companies are undervalued because these companies may have bought land long time ago at very cheap price, agriculture land, maybe they buy in Kajang, or they buy in Johor Bahru, or they buy in Kuala Lumpur, Selangor. And you know the land is now scarce, right? So there are many companies quietly sitting on hundreds and thousands, not thousands, but thousands of acres of valuable land that they bought last time at a very cheap price, maybe 5 cents per square feet or 2 cents per square feet. Now in Kuala Lumpur or in Shah Alam, you walk around easily, it can be 50 ringgit. So the land would have appreciated many times. But in the accounts, penyata kewangan is still recorded at cost based on historical cost accounting lah. So in the company, there may be a few shareholders, maybe family shareholders or friends, shareholders. But the company is run by a particular CEO. There's one of the major shareholders, and this director or this CEO, because not everybody can run the company. It's only the director. If you're appointed as a director, you run the company. Even though you own shares in the company, you cannot simply run the company unless you're appointed as a director. So many of these people who are shareholders but not directors may feel that they have been cheated because the value of the assets is not truly reflected in the financial statements, and the managing director CEO refused to revalue the assets. Yeah, so the books looks like the net asset is very low, but actually it's many times higher. So what happened is that these aggrieved shareholders can apply to the registrar companies and ask them to direct the CEO or the director of the company to revalue the assets. Revalue assets. So this is when the true value can be seen in the financial statements. So this one is usually done by aggrieved shareholders who want to know the true value of the company. 257. This one very simple. Duty to circulate copies of the financial statements. That is the answer already. Okay. So you can say for every financial year, a copy must be sent to the following people. You can shorten your answer. Yeah. So a copy of financial statement should be sent to every member of the company, every person who's entitled to receive notice of general meeting, every auditor of the company, and every debenture holder upon request. Okay, upon request. I think that's good enough. It's good enough. No need to have the bottom part lah. So this part is good enough. Okay, that's good enough. And as usual, include the punishment on conviction if they don't follow. The company and officer. The word is officer, not director. Officer, but of course the director can also be the officer lah. It's a fine of 50,000. So remember, you cannot claim this money back from the company as a reimbursement once it's called fine. So for answer, this shaded part is good enough. No need to write the balance. 258. Time allowed for sending out copies of the financial statements. 6 months. Within 6 months, okay. For public companies, so that is good enough for the answer. For private company, the financial statement report should be circulated within 6 months of the financial year end. So if your financial year end is 31st December 2023, it should be circulated within before 30th June 2024. Now, for a public company that's listed, it should be at least 21 days before the annual general meeting. So your general meeting is on 30th June 2024. 21 days before the meeting, that financial statement should be circulated. Now, does it have to be a hard copy? I think nowadays with digitalization and ESG, because they want the same paper, it can be accepted that it's been sent by email in PDF form to the shareholders. So nowadays we don't receive hard copy anymore. We receive a PDF, but you can request for hard copy if you write to the company lah. So thick, you know. Actually, to prepare one of this report, it's not cheap. It costs about 20 ringgit. It is color. So it does make sense that nowadays they send soft copy. Okay. So the answer, just the darkened part is good enough. Private company, the financial statement reports should be circulated within 6 months after the financial year end. For public company, it should be at least 21 days before the date of the Mesyuarat Agung annual general meeting. Punishment. So in your answer, always talk about the punishment. Fine of 500 ringgit. There is a 50 ringgit fine. Plus, if you don't correct the matter, each day you cannot roll up 500 ringgit. So you forget about it for 1 year, 500 times 365 days, that's your punishment lah. Again, this one company cannot pay for you. 258, 259. Duty to lodge financial statement reports with the registrar. The financial statement is quoted in the ringgit. So your financial statement should be in ringgit. The balance sheet item all in ringgit. And then it can be in English or Bahasa and lodged with the registrar. I think that should be good enough. Duty to lodge financial statement. You can say that the financial statement be quoted in ringgit, in either Bahasa or English, be lodged to the registrar within 30 days. Within 30 days after financial statements and report are circulated. That's good enough. Okay, you can say that within 30 days after the financial statements and reports are circulated. And then for public companies, within 30 days from AGM. So some people forget. If you forget, there's a fine of 50,000. And if you forget further, every day is 1,000 ringgit. For each day you never do duty to lodge the financial statement. Don't have to copy the wording lah, just in short form. $260. There's some company called Exam Private Company. So an Exam Private Company shall lodge a certificate within 30 days. This is good enough for answer. An Exam Private Company shall lodge a certificate relating to its status within 30 days with the SSM from circulation of financial statements. Okay. This is for a kind of company called Exam Private Companies. So this kind of account, company don't have to lodge financial statements. They are usually small company, very small company, maybe with only one shareholder. Okay, 261. Auditors' statements. So 260, if you lodge a certificate relating to an exempt private company, if you are not required to prepare or lodge financial statements because you are exempt private company, you have to make a statement. Whether the company keep records, yes, and whether you're solvent or not. Okay, so if you are an exempt company, you can say that you're not required to lodge financial statement. The registrar shall lodge auditor statement. So the auditor should lodge a statement that the company has been kept proper books, records, has been audited in accordance of the Act. I think this answer is good enough. A and B. Okay. This is good enough. The companies who are not required to lodge financial statements, that means you are exempt private company, they have to get an auditor statement stating that the company has kept proper books, financial statement has been audited, and has been audited in accordance with the Act. A and B is good enough. So a lot of rich people, they form this type of company, all right? So they keep it a secret, so people cannot know what they have. They apply for this status, right, called exempt private company. But this is only possible if you have only got one or two shareholders and it's private. Okay, we have finished that. Now we come to the auditor. Come to the auditor. Okay, do you want a 10-minute break before we move on to the auditor section? I know it's quite dry today. 10-minute break?
Yes.
Okay, to go and take your coffee, to wake up, wash your face. I know it's quite dry. Okay, at least we are going into your quiz, this one, and get it out of the way if possible. Yeah, go and take a 10-minute break and then we'll come back. We'll be doing the auditors section. Okay, so you're back again. Okay, now we're looking at auditors. Just now before the break, we were looking at what is financial statements. Penyata kewangan. What constitute financial statements? So now this one, 262, 262, talking about juru audit. There are many types of auditors lah. You know, we have external independent auditors, which is the type of auditors we're referring here. But remember, there's also juru audit dalam. So you remember internal auditors. So in the Enron WorldCom case, the one that blew the whistle was the juru audit dalam. Then we also got auditor general. This one is the auditor that audit the government. Just to let you know that there are different type of auditors. So we have external auditors, external independent auditors. These are the ones that's licensed under Akta Syarikat and also under CMSA 207 Capital Market Service Act to conduct independent audit on Syarikat. So this is the type of auditors we are referring to now. So what is outgoing auditor? Outgoing auditor means the auditor whose term of office has expired or is about to expire. Easier, so this is the answer. So do type in your answer quickly. Now, company auditors, 263. Not every accountant can be an auditor, you know? So don't be mistaken. But in US, when they refer to accountant, they also refer to auditor. They mean interchangeably in US. But in Malaysia, you talk about accountant, they are accountants. But auditors are licensed to audit. They are actually accountants who are licensed by the Ministry of Finance and who are licensed to audit. So not every accountant in Malaysia can be an auditor. So 263 is it says that company auditors need to be approved by the minister in charge of finance. So it's the Ministry of Finance lah, MOF. Who is the Minister of Finance now? It's actually a Prime Minister also, Anwar. So he is the one, you know, will approve. His ministry will approve the licensing for company auditors. So any chartered accountant may apply to the finance minister to become a company auditor. The minister may approve the applicant who is deemed competent and pay the fee. So it's for 2 years. The approval period is for 2 years unless revoked by minister for doing terrible audit. It can be cancelled. The minister may authorize someone in charge of. So all this no need. All I have to do is just remember any chartered accountant that's your answer. Any chartered accountant may apply to the finance minister, may revoke, may approve, and pay the prescribed fee 2 years. Then after 2 years, apply for renewal. Okay, so your answer for this, just share the area. No need to write a long story on this lah. 264, company auditors. An auditor cannot knowingly appointed as an auditor if, okay, how to put it in simple English, a person cannot call himself an auditor if he is not an approved company auditors. So you cannot put it in simple English. You cannot call yourself an auditor. You cannot pretend to be an auditor. Simple English lah. You cannot pretend to be an auditor. Some people pretend to be doctor, pretend to be auditor. pretend to be a policeman, you know, and recently there are some people pretend to be a minister of some organization, you know. So there's an offense to pretend. If you are not an approved company auditor, you go and tell somebody, I'm an auditor, but you're not licensed. Okay? You owe the company 25,000. You cannot call yourself an auditor, even though you're licensed. You cannot audit a company, although you hold a license. You cannot hold, I think the word is you cannot hold yourself as an auditor. You cannot hold yourself an auditor, or cannot hold yourself as an auditor if you are not an approved company auditor. No license. Okay? If you are indebted to the company for more than 25,000 ringgit, you cannot call yourself, you cannot audit the company. If in the company your relative is there, you cannot call yourself, you cannot hold yourself out as an auditor of the company. If your wife is in the senior management or the CEO, you know, cannot, huh? Responsible for having relations. So if you are a member of, if you are having a relationship with the person in charge of debenture holder, you know, or to keep the register of company, you also cannot be an auditor. That means ROC, your close relative is there. If you are undischarged bankrupt within and outside Malaysia, you also cannot become auditor. Or you're convicted, if you are convicted for offense, and you're jailed for 3 months or more, you cannot call yourself an auditor. Okay? So there are a lot of restrictions. So company auditor, cannot call yourself as an auditor, cannot hold yourself as an auditor. You are not an approved auditor. You owe the company money, 25,000. You cannot become the auditor. You have spouse or relative, close relative in the company. Cannot. You have close relationship with debenture holder. The debenture holder of the company, you cannot become the auditor. For example, you are the auditor for the debenture holder of the company. Debenture holders, right? The trustee or something like that. You cannot become the auditor. Conflict of interest. And if you are convicted of an offense and then kena penjara for 3 months or more, you cannot become an auditor. But it's funny that it's offense involving fraud. What if you go and hantam somebody, violence? I guess it's the same. Okay. Now, sometimes an auditor can be a firm or partners. Okay. So a firm or partner should not knowingly consent to appointment or act as an auditor, and should not prepare audit report unless all partners are approved auditors. Unless all partners are approved. For example, Pricewaterhouse or Deloitte audit the books of Maybank. I think it's Pricewaterhouse, I'm not sure, maybe Ernst & Young audit Maybank. Okay, and it has got 100 partners or 60 partners. All the partners must be approved auditors, must hold license. Each of them must hold their own license. Okay, even if one of them don't hold, then it is an offense. Because when they assign LLP, Ernst & Young, it's presumption that all members, partners, are licensed auditors. Of course, the partner will be assigned to do the job. He will sign in his own name as well. So the auditor or the audit firm that contravene this section is liable to a fine of 100,000 ringgit. ringgit. Okay, 100,000 ringgit. So if your auditor calls himself an auditor and it's not an auditor, you can be punished. If you are a firm of auditors, that means you run a partnership like Ernst & Young, Pricewaterhouse, Deloitte, and so on. Every member of the partner must be a licensed auditor. You cannot have, say, 60 auditors in there, 59 is licensed, one is not licensed. That's an offense. All must be licensed. Okay. You know how much Maybank is charged for audit fees by, I think it's Ernst & Young, I'm not sure. One of the big four auditors. Make a guess, how much does the auditor charge Maybank for the 2023 audit? Type in your Q&A box. What do you think the figure is? How much did the auditor charge Maybank? Did I ask the question already? Last. Yeah. What's the answer?
25 million.
Yeah, 25 million. It's amazing, isn't it? So kalau dia dapat 5 clients of the same size, cukup already lah. 100 over million. 25 million. The company that I work for, small little kucirat company also, they charge about 120,000 ringgit for audit. So the fees are not bad, but if you kena one time, if you kena for, say, somebody sort of sue you for doing a audit report, and then the company go bankrupt, is there a limit to how much the auditor can be fined or have to pay penalty? Is there a limit? Can the auditor limit himself from being sued by bankers, by creditors, by shareholders? You know?
Cannot.
But they try to lah. If you read the audit report of a company, Maybank or IHB Bank, they always put a statement down there that this audit report is for the information to shareholders only, and the auditor, whatever his name is not to be held liable if it's used by other parties. They try to distance themselves lah and limit the liability to only some shareholder. But in real life cases, they can be sued for negligence. It's just like a doctor, doctor can be sued, for negligence also. There were a few cases, the doctors, were sued for cutting off the wrong leg, who's liable, is it the hospital or the doctor? So they often argue lah. So in many cases, they argue, is the doctor liable? The doctor is at the hospital as a consultant, so they argue doctor is liable lah. The hospital not liable. But now, recently, there's a court finding. The judge says that the hospital is liable because the hospital is providing all the support service. So if the hospital support service, the person who come in to do the marking of the leg, mark the wrong leg, so doctor come in and cut the wrong leg, so who's liable? Let's say both liable. So in the case of the auditor will be liable, all right, fair enough, but the audit firm also liable, so one die or die. One die or die. So the other auditors also shivering because any of the auditors can make a mistake, right? Yeah. So when they kena sued, the whole firm will bear the damage. Like for the 1MDB case, the fine for I can't remember Deloitte was something like 600 million ringgit. 600 million ringgit to pay the Malaysian government as a settlement. Not even a court case, a settlement. So the firm pay lor. The firm pay. So there's no limit to the liability. No limit to the liability. although they try to limit themselves. Okay. On top of that, you might kena also from authorities on criminal actions. I hear some noises. I think some of you may have unmuted. Can you mute yourself? Okay, let's continue. Registration of a firm of auditors. So this is for new auditors lah. So the new audit firm should notify the details to the registrar within 30 days from date of business commencement. I think that's good enough for your answer. 265. The shaded area, good enough for your answer. Okay, 266. Power and duties of auditors. This one is quite useful to know. I think for this first part, it's good enough to say that every auditor should report to the members. It's good enough to have this. Okay. It's good enough to say this. Every company auditor should report the financial statement to members. Okay, it's good enough. Number one. Number two, the auditor should state that accounts give a true and fair view. But if in its opinions, I think you can say A, if the financial statement are not drawn according to accounting standards, he have to give his reason why. Yeah. If the statements are not drawn up in accordance with the accounting standards. And then C, for consolidated accounts, you have to state which are the companies, subsidiaries he's not acted as auditor, whether there's any irregularity in the financial statements, you need to state that. And then reasons for not being satisfied for any matters referred to above. Okay, so for this answer is power and duties of auditors. Every auditor required to report to members. Okay, this is good enough. Report to members. Whether accounts drawn up are true and fair. If not drawn up in accordance to accounting standards, need to state, if drawn up in accordance to the standard, will it give true and fair rule? Okay. C, for consolidated financial statement, the name of subsidiary is not acted as the auditor. Any irregularity, other palsu accounting or fraud or whatever, financial statement, and reasons for not being satisfied to any matter. I think I just put any matter lah. So reason for not satisfied to any matter. Okay. I think that's good enough for this part. This part. And of course, number 3 is forming an opinion. Okay, forming an opinion whether all information, explanation obtained, and whether accounting records are kept. That's good enough. Okay, so power of duties of the auditors don't have to be so long. You can condense this. Okay, this section you may want to say also, for purpose of audit, the auditor has a right to request for accounting records from any company officer at all times. For purpose of audit, the auditor has the right to request for accounting information. If you do not give it to him, you're liable for a criminal offense. If you're charged in court and found guilty, you can be charged in court. Purpose audit, the company auditor has a right to request for accounting and related records. Okay, 12 and 13, you need to give answer. Punishment. So for an officer, who fail to give access to accounting and other records information, you are liable to 3 years jail or fine not exceeding 500,000. That means you're an officer or you're the auditor of another firm that the auditor is not the auditor. The auditor audit other anak syarikat, but is a different auditor. That auditor has to give information to the holding company auditor. Okay, or you're the officer and CFO of the company. If he fails without lawful excuse to give access to accounting or other record, right, to the auditor, or delay an auditor to perform his duties, you commit an offence under the Act, you're liable to imprisonment of 3 tahun or fine of 500,000 or both. If you're an auditor, on conviction, you're charged for not doing what is required, you can be imprisoned to 5 tahun, fine of 3 million ringgit or more. So no joke, auditor get punished worse than officer. Officer only get 500,000 fine, 3 years jail. Auditor, if you contravene this section, very teruk case 5 years jail or a fine of 3 million maximum or kedua-dua. So still one become auditor. This is under the new Akta Syarikat. The old Akta Syarikat very kind one, don't have all this punishment. But the new Akta Syarikat 2016 ada banyak punishment. Now this act also divide two sections: auditor of a private company and auditor of a public listed company or public company. Okay, so 267 says that a private company shall appoint an auditor for each financial year. There may be exemption. So your answer can be just like that. Okay, so a private company shall appoint an auditor for each financial year. There may be exemptions as determined by the registrar. The auditor shall only be appointed either by the board or the members. Okay, I think is good enough. This one also provides for punishment, but they didn't mention what's the punishment. It's an offense. An offense without punishment will work. It is an offense if the company and every director fail to appoint an auditor. It's funny, there is an offense, but there's no punishment. So that means only no warning, is it? That one I don't know. So for private company, you need to appoint an auditor. There may be cases where you do need to, then you apply to the registrar for exemption. Auditor should only be appointed by the board or the members. That's good enough, huh? Power of registrar to appoint auditors. If a private company don't appoint an auditor, the CCM or SSM can, at the request of any member of the company, appoint the auditor. Now, who pays for the audit fees? Of course, the company law. If the company got no money to pay audit fees, I think no auditor will become auditor. So this one is a section that it could be redundant. If the company got no money, nobody will want to become an auditor, right? So even if registrar want to appoint, nobody will want to take up the appointment also because they want the fees. And the fees would generally come from the company. Okay. 269, term of office. So term of office, this is good enough. Auditor of private company shall hold position according to the appointment term and ceases from position 30 days from circulation of financial statement unless he's reappointed. Okay, so you hold office on appointment until 30 days from circulation of financial statement. Then usually he's reappointed by the director. Is good enough. 270. Prevention by member of deemed reappointment. So an auditor should not be deemed to be reappointed if the company receive a notice from a member who say don't reappoint him. But this shareholder must hold at least 5% of the shares. Okay. So if somebody protests, doesn't want the auditor to be reappointed, a shareholder can receive, put in a notice in writing to the company secretary. But this shareholder must hold at least 5% of the shares and say that I protest, I don't want this guy to be reappointed as the auditor. So far so good? This is in relation to private company. Any questions? Any questions? Can unmute to ask if you want. I know it's a bit dry, but this is how the law is. Any questions? Okay, no question. Then we move. Yes.
Yep. Which organization in charge, responsible to check if the company has done their audit or not?
Normally it's the SSM, the commission, company's commission, SSM. Okay. So SSM, but usually SSM will wait for whistleblower. whistleblower. So if you don't lodge account and everything, I think the CCM will eventually come and audit you and will denda lah. Will denda. But CCM is not that efficient or not that, what do you call that? They don't normally go and chase after people lah. Right? So if you're talking about they did not lodge accounts, audit accounts, somebody may complain. So they complain, then the investigator from SFM will come and check lah. Then there's a fine, or the punishment is there, and SSM will take legal action lah. Will take what do you call that, enforcement action. So they are fined. It can be a compound, yeah. If you're lucky enough, you may get a compound. If it is a listed company, normally there will be many whistleblower, and the Securities Commission is the corporate policeman. They are somewhere in Damansara. You find this nice looking building. They are the ones that will monitor into listed company. Okay, so if it's not audited, SC may take action under Capital Market Service Act, which provides for 10-year jail, much more heavier penalty. If it's a bank, if the company is a bank and it's not audited, Bank Negara will hantam them and will jump on them. So it depends on what type of companies. Is it a public company? Is it a private company? Is it a financial institution? Yeah. So if it's a listed company, it's highly unlikely that it will not be audited, because in listed company, I'm talking about listed company here, they're required to lodge audited accounts within 6 months from the balance date. So, for example, if it's say Tenaga balance date 31st December 2023, by June 30th June 2024, they must come out with audited annual accounts, financial accounts. If they don't, Bursa will suspend them from trading. There'll be a fine, and Bursa will suspend them from trading, and you will be tagged as a PN17 company, and then a whole newspaper come out, everybody will know about it lah. So there's very little chance to escape if you are a listed company. And then within 9 months from balance date, they must come up with the annual report. So in the annual report, the shareholder and bankers, in a public document, will be able to see who the auditor is, or whether auditor qualified the account. If the auditor qualified the account also, and an immediate announcement must be made by a listed company. So as far as banks are concerned, as far as listed companies are concerned, the whistleblower and reporting requirements require this to be reported immediately. Immediate announcement. If it's first qualified account, auditor sign off and say there's something wrong with the accounts, immediate announcement. If the auditor refuses to sign by the deadline, also there will be immediate announcement. Have you attended an annual general meeting before? Anybody? Any of you attended an annual general meeting? Huh?
Me, I did.
Okay, yesterday 2 days ago, I attended Maxis general meeting lah. So in there you will find the procedure to reappoint auditors and to note the financial statements. Financial statement during that time is not tabled for approval by shareholders. Why? Because under Akta Syarikat, the one that actually responsible for accounts is the pengarah. It's not the shareholder. So those items are presented for shareholder to ask questions. Maybe I show you the video proceedings of that AGM, so you have a better appreciation of how the process is for presenting audited accounts and also appointment of auditors at the AGM. If you give me a second, I will unshare this first. Okay, just now we are looking at auditors for private company. Now we are coming up to provisions relating to audited for a public company. So Maxis is a public company, yeah. So I will show you now the responsibility of the auditor of a public company, yeah, and also the responsibility of the chairman, and also the directors, independent directors. Give me a second. I will unshare and take you to. This meeting was held, but funny, after the meeting, 2 days later, the chairman resigned. The chairman resigned. Okay, so what you see, do you see the screen is the annual general meeting for Maxis. Of course, you see me in there in the question chat box. This is a virtual meeting. I've asked for door gift, you see my name there. I'm a shareholder, so I'm entitled to actually ask questions. So what are the questions that I raised? You're entitled to raise questions at the AGM. So when we are studying the Malaysian Code on Corporate Governance 2021, maybe next week or the week after next, we find that there are three basic principles of the code that listed companies are strongly encouraged to follow. Is number one, there should be an effective board. Number two is there should be effective risk management and audit. And number three, there should be effective corporate presentation, reliability of corporate information, and also engagement, meaningful engagement with stakeholders and shareholders. So this is one of the examples of how they actually comply. So you can see that we can actually engage with the management, with the board of directors via the chat box. So actually, we can also, I believe that we can also go by video, voice chat as well, but they have disallowed the function. I suspect that they don't do it because maybe they find that it's too cumbersome to manage so many shareholders asking questions on the audio, so they restrict it to written questions live via Q&A messaging box. Okay, let's have a look at this procedure.
Without a hitch, from work time to family time.
And Madam Jennifer Wong.
Last time they had a Egyptian. Now we have 17 seconds, 15 seconds to the AGM. Maxis belong to 2 seconds. His son. This is my question on the board, if you can see. And this is actually Dr. Mahathir's son. Mahathir's son. Mahathir's son.
Ladies and gentlemen, a very good afternoon to all of you. On behalf of the board and the company, I welcome you to the virtual 15th Annual General Meeting of Maxis Berhad. We wish to thank all of our shareholders, proxies, and corporate representatives for your participation via the remote platform. All 10 directors of Maxis Berhad are present at this 15th AGM, with 9 of us at the broadcast venue and 1 joining us remotely. Our Chief Executive Officer, Chief Financial Officer, members of the Maxis management team, and key essential persons are also present with us at the broadcast venue. May I introduce the directors, our Chief Executive Officer, and our Chief Financial Officer present with me at the broadcast venue. On my right, Dato' Hamidah Naziadin, Director, Mr. Alvin Hugh.
So this Independent directors, the pretty lady there, they are pengarah bebas. They have no relationship with the major shareholder or the CEO. Their role is to become internal watch auditors. They are the internal, what do you call that? Watchdogs, internal watchdogs, in other words, of the company, where they are required to look at whether company comply with regulations, and if it doesn't, they have to voice it out, and they may need to whistleblow also lah. So that they're internal watchdogs. 1/3 of the board of directors should be pengarah bebas.
Director, Mr. V. Kumar, Director, and on my left, Mr. Goh Xiao Eng.
So the question is, can we trust this independent director to look after our interests? I'm an independent minority shareholder. Boleh percaya ke this guy doing his job to look after my interests? It's a good question, isn't it? Look at what happened to Enron and WorldCom. These fellas in there are sleeping on the job, or they are the friends of the CEO, and they get paid handsomely for keeping their eyes closed. So again, this role of these fellas are very important. Are they doing their job?
Our CEO, and Madam Jennifer Wong, our CFO. Behind me, from
CFO, also a very important person, Chief Financial Officer, CFO. If you're not careful, the CFO become what? Chief Fraud Officer. All right, she will be the one that can cook the books, just like in the Enron case and WorldCom case. Now you notice that in the WorldCom case and Enron case, the CFO are boys, right? Are guys. We also the internal auditor who blow the whistle are ladies. So does it mean that you can trust ladies more? That means CFO lady is safer. I don't know. Just food for thought. So maybe lady make more honest Chief Financial Officer.
on my right, Madam Ui Hu Ting, Director, Mr. Adrian Ong, Director, Mr. Lim Gi Kiong, Director, Mr. Mohammed Abdullah Al-Harbi, Director, Mr. Abdul Aziz Abdullah Alhamdi, Director. Also present at the broadcast venue with me are Ms. Tan Chin Yi, Engagement Partner, and Mr. Teh Guan Lee, Engagement Director from PricewaterhouseCoopers, our external auditors, Ms. Deepa Kaur, the company's secretary, Mr. Shafiq Azli Mashhar from our group internal assurance. One director who is and Madam Jennifer Wong, our CFO. Behind me, from my right, Madam Ui Hu Ting, Director, Mr. Adrian Ong, Director, Mr. Lim Gi Kiong, Director, Mr. Mohammed Abdullah Al-Harbi, Director, Mr. Abdul Aziz Abdullah Alhamdi, Director. Also present at the broadcast venue with me are Ms. Tan Chin Yi, Engagement Partner.
So it is compulsory for the auditors to attend the AGM to answer questions by shareholders. So in this case, Pricewaterhouse sent two engagement partner into attend the meeting. Why got two? Because nowadays there's quality control. So the partner do the audit, but then the partner's work is reviewed by a review partner. This is a check and balance. So this is because in the partnership, one die, all die, right? So when this guy, I think he's the main partner, do the work, his work is reviewed and checked by a review partner. So this is to ensure that everything is okay and there's no big problem. And of course, the review partner also concerned, right? Because one die or die. So she has got skin in the game, make sure that everything is okay. So if there's any doubt, they can trash it out with the other partners and make sure the matter is resolved, and they don't simply sign off the accounts as true and fair. So does that answer your question? That the process of looking at whether the accounts are audited and whether it's qualified. Is at the AGM, annual general meeting, that must be held within 9 months of the balance date of the company. Audited accounts are supposed to come out within 6 months. The annual general meeting will be 9 months, within 9 months.
And Mr. Teh Kian, Engagement Director from PricewaterhouseCoopers, our external auditors, Ms. Deepa Kaur, the company secretary, Mr. Shafiq Azli Mashhar from our group internal.
So this is the internal auditor. He's the internal watchdog. He can be the whistleblower if anything goes wrong. But this time is the reverse. WorldCom and Enron case is a lady. So in this case, it's a guy, right? Is he brave enough or not to whistleblow? If anything happens and he suspects there could be fraud by the CEO, for example, he's the biggest guy in the company. Would he dare to whistleblow? It takes a very brave man or woman to do that. Okay, so his role. He also attend the AGM, right? In case anybody asks questions on internal control and what he has done during the year, whether he found any fraud. Sometimes they ask him, "Hey, do you find any funny thing happening or not?" He's supposed to reply, company secretary is important. She was the one that is a goalkeeper, and she's supposed to highlight to the board any problems and any non-compliance with Company Act or Securities Commission, Capital Market Service Act listing rule. Her duty is to become the watchdog. She will blow the whistle if anything not right. Okay, so this is another guy that will blow the whistle if anything not right. So there are multiple checks for a public listed company.
Assurance. One director who is currently overseas has logged in and joined this meeting remotely. May I introduce you to him, Mr. Mazen Ahmad Al-Jubair.
So under digitalization, directors who are overseas or in the places they cannot fly in, they can attend remotely, provided the articles of the company allows that. So a lot of companies have changed the articles to allow for remote Zoom or online digitalization meeting, which will be counted as a meeting. Just like I'm attending the board, the AGM remotely and I can vote. And I can ask questions via the remote chat, the Q&A chat box.
Thank you. For shareholders' information, the Board of Directors has instructed our group internal assurance to oversee the collation of questions submitted.
Nowadays, they like to use nice words. Instead of calling it internal audit department, they call it internal assurance. But let me assure you that it means the same thing as internal audit. So a lot of companies change the name, they call it assurance department. Like the auditors name card nowadays, they don't say audit, they say assurance services or assurance service provider. So it's actually another name for audit. So they say our assurance department is another name for internal audit, but it sounds less scary, not so scary. Would you ever want to have lunch with your assurance department staff? Better not. So a lot of people will wait there for lunch.
By the shareholders for this 15th AGM to ensure that they are responded to accordingly. Welcome everyone. We will now proceed with the 15th AGM. May I first call upon the Company Secretary to confirm the presence of a quorum.
According to Rule 91 of the company's constitution, 3 members present in person or by proxy, or in the case of corporations which are members, present by their representatives appointed pursuant to the provisions of the company's constitution and entitled to vote, shall be a quorum at the general meeting. I am pleased to confirm the presence of the requisite quorum as at the commencement of this meeting. As at the start of this meeting, 659 shareholders, proxies and authorized representatives have logged in for this meeting using the remote participation and electronic voting platform. As for proxies, Tansu Chairman, to confirm, the shareholders of 7328496 shares have lodged their proxies within the stipulated time, and the holders of 641121233 shares have appointed the chairman of the meeting to be their proxy. Thank you.
Thank you.
So this whole proceeding you're watching is actually under Akta Syarikat, Companies Act 2016. But of course, these are other provisions of the Act. What we are looking at today is to do with financial statements and also the appointment of auditors. So there are also other sections that deal with the procedure during the meeting and the articles of the company, which is actually there's a format given in Companies Act, M&A, memorandum and articles.
Ladies and gentlemen, the notice of the 15th AGM has been given to all shareholders entitled to receive this notice under the provisions of the Companies Act 2016 and the company's constitution by way of letters sent to shareholders, publication on the website of Maxis Berhad, announcements over Bursa Securities, and advertisement in the Star on 17th of April 2024. With the notice of AGM circulated within the stipulated time frame, we shall take the notice as read and proceed to the agenda of this meeting. In accordance with paragraph 8.29A1 of the main market listing requirements of Bursa Securities, and as stated in the notice of the 15th AGM, all 17 resolutions today will be voted electronically by poll. The company has appointed the company's share registrars, boardroom share registrars in Berhad, as the remote voting and poll administrator to conduct the polling process, and Sky Corporate Services in Berhad as independent scrutineers to validate the votes cast at the meeting.
So you notice that one of the resolutions is to reappoint Pricewaterhouse as auditors. So this is the license number to hold office from conclusion of this annual general meeting until the conclusion of the next general meeting. Okay, and to authorize the director to fix the remuneration. So normally the shareholders are the ones that are supposed to determine the remuneration, but in this meeting, the power is given back to the directors to fix their fees. So this is by way of resolution, and you will take 50% on one to get this resolution approved. So this is for the reappointment of the auditors. And accounts is not included in resolution because it's to be tabled only not to be approved.
Gentlemen, to give more time to shareholders, Companies Act 2016 and Sky Corporate Services in Berhad as independent scrutineers to validate the votes cast at the meeting. Ladies and gentlemen, to give more time to shareholders and proxies to vote on the resolutions at this meeting, the poll for voting is now open. You may cast your votes at any time up to the close of voting.
Independent director. Sorry. Recurrent related party transaction.
You may cast your votes at any time to the close of voting, which I will inform you accordingly.
All these are resolutions.
The representative of Boardroom Share Registrars in Berhad will now give us a presentation on the e-polling process.
Dear shareholders, information message will appear to it.
I will now go through the items on the agenda.
It's part of practical.
The first item on the agenda is to receive the audited financial statements of the company and of the group.
So you can see, agenda 1 is to receive the audited financial statement, not to approve. So to receive and to question only. So to receive the audited financial statements of the company and of the group is Kumpulan and Company for the financial year ended 31st December 2023, together with the reports, director report and auditor's report thereon. So note this, accounts are to be received only, not to be approved by shareholders.
Group for the financial year ended 31st December 2023, together with the report of the directors and auditors thereon. This agenda item is meant for discussion only, as Section 340 of the Companies Act 2016 does not require the audited financial statements of the company to be formally approved by the shareholders. Hence, this agenda.
So again, this refer to Akta Syarikat 2016 that we were going through this now.
The item will not be put forward for voting. Shareholders may pose any questions that you have in relation to this agenda item during the Q&A sessions. Ordinary Resolution 1 is to re-elect Mr. Muhammad Abdullah Al-Harbi, who retires pursuant to Rule 131.1 of the company's constitution and, being eligible, has offered himself for re-election. Mr. Muhammad's profile is found on page 67 of the 2023 Integrated Annual Report. Ordinary Resolution 2 is to re-elect Mr. Mazin Ahmad Al-Jubair, who retires pursuant to Rule 131.1 of the company's constitution and, being eligible, has offered himself for re-election. Mr. Mazin's profile is found on page 67 of the 2023 Integrated Annual Report. Ordinary Resolution 3 is to re-elect Mr. Abdul Aziz Abdullah Al-Hamdi, who retires pursuant to Rule 131.1 of the company's constitution and, being eligible, has offered himself for re-election. Mr. Abdul Aziz's profile is found on page 68 of the 2023 Integrated Annual Report. Ordinary Resolution 4 is to elect Mr. Adrian Ong, who retires pursuant to Rule 116 of the company's constitution and, being eligible, has offered himself for re-election. Mr. Adrian Ong was appointed as a director of Maxis on the 8th of August 2023. Mr. Adrian Ong's profile is found on page 66 of the 2023 Integrated Annual Report. Ordinary Resolution 5 is to approve the payment of directors' fees and benefits to the non-executive directors of the company from the conclusion of this AGM until the conclusion of the next AGM of the company, to be held in 2025 in accordance with the remuneration.
So directors' fees and auditors' fees are important information that need to be disclosed under the Companies Act.
Structure set out in Note C of the notice of the 15th AGM. The remuneration comprises fees and or benefits payable to the chairman, members of the board, and or the chairman and members of the board committees. The proposed resolution, if passed, will allow the company to make payments or fees to non-executive directors of the company on a monthly basis and to make available the benefits as and when incurred in accordance with the remuneration structure set out in Note C of the notice of the 15th AGM. Ordinary Resolution 6 is to reappoint PricewaterhouseCoopers PLT or PwC as auditors of the company to hold office from the conclusion of this AGM until the conclusion of the next AGM, and to authorize the directors to fix their remuneration.
So this is an important resolution today to appoint this auditor. Now, how long can this auditor stay? Anybody? If they stay 10 years, 20 years, can you? Should they change auditors? Should Maxis change the auditor? You think so?
Yes.
In some countries, they require the auditor to be changed every 4-5 years lah. But then, how many big audit firms are there? You know, there are only big 4 left: Pricewaterhouse, Deloitte, KPMG, and what's the other one? The last one. So there are big 4 auditors. So there are limited number of big audit firms that has got a branding to do audit. So what they do is, some of them do change audit firm but by and large, what happens is that they will change the partner. So maybe after 4 years or 5 years, they will rotate the partner. So another partner of Pricewaterhouse will come in to audit, and then there will be another different audit review partner. So that is acceptable that they change audit partner rather than the audit firm, because it's a different person, right? So it's counted as rotation also lah. This is to address the issue that, you know, last time got big 5 audit firm, now only got big 4. So if you rotate, also you only rotate among the 4, yeah. Now when you rotate auditors, say from Pricewaterhouse to Deloitte, what is the procedure to do that? The procedure is you will announce at the meeting, before the meeting, that Pricewaterhouse is now vacating the position, or usually politically right way, you say that do not wish to seek re-election. They do not wish to seek election. That's the politically correct word. So normally they will talk to the auditor and say, hey, we want to appoint a new firm because you're too expensive, usually lah. So then they will say that Deloitte has agreed to take over as a new auditor. So the procedure is that Deloitte will then talk to Pricewaterhouse and ask them, is there anything that I should know before I take up the job on the outside, on a private basis lah. That's the process, yeah, to change auditor. But normally is if they're happy with the auditor, the fees are okay, they would accept that they change the partners rather than change the audit firm.
Ms. Tan Chin Yi, the engagement partner, and Mr. Teh Guan Lee, the engagement director of PwC, are also present at this AGM. Ordinary Resolution 7 is in respect of the approval of Dato' Hamidah binti Naziaddin to continue to serve as an independent director beyond a cumulative term of 9 years for a further 1-year period from 18th of May 2024 to 17th of May 2025. The Nomination and Remuneration Committee and Board have assessed the independence of Dato' Hamidah and are satisfied that she consistently demonstrates independent judgment and acts in the best interest of the company, as explained.
So a lot of emphasis is placed on the word independent, or bebas, for pengarah bebas, independent director, and also auditors, independent external auditors. So big emphasis on independence. Seem to be independent and must be independent lah.
In further detail in Note E of the notice of the 15th AGM. The profile of Dato' Hamidah is found on page 64 of the 2023 Integrated Annual Report. Ordinary Resolution 8 is for the purpose of renewing the general mandate for issuance of shares by the company.
And for your information, just 3 days after the AGM, the chairman resigned. I think I sent you a clip of that in your WhatsApp. He say, you know, he's resigning to pursue other interests lah. But I think the real story is that he's now under interview by MACC on his matter, on his private matter, wealth matter, and the investigations now started on him and his brother. So maybe he felt it's not appropriate for him to continue as a chairman of a listed company. So he quietly resigned lah. You can see his statement. His statement said that he's proud to be a member of the board and he's, you know, served his time. And therefore, he's now resigning, yeah, to pursue other interests. But I believe the real reason is probably under investigation by the MACC at the moment. So under corporate governance, if you're under investigation, it's better not to be a board member until you are cleared. Until you are cleared.
Pursuant to Section 75 and 76 of the Companies Act 2016. The company did not issue any shares pursuant to Section 75 and 76 of the Companies Act 2016 under the general mandate sought at the 14th AGM held on the 18th of May 2023, which will lapse upon the conclusion of this AGM. The proposed resolution, if passed, will give authority to the directors of the company from the date of this AGM to allot and issue shares or to make or grant offers, agreements, rights, or options in respect of shares to such persons in their absolute discretion, including to make or grant offers, agreements, rights, or options which would or might require shares of the company to be issued after the expiration of the approval, without having to convene a general meeting, provided that the aggregate number of shares issued does not exceed 10% of the total number of issued shares of the company for the time being. This authority, unless revoked or varied at a general meeting, will expire at the conclusion of the next AGM of the company. The general mandate sought will enable the directors of the company to allot and issue shares, including but not limited to making placement of shares for the purpose of raising funding for investments, working capital, and general corporate purposes as deemed necessary. We shall now proceed to Agenda 8 in respect of ordinary resolutions 9 to 17 in relation to the shareholders' mandate for the company.
So transaksi dengan parti berkaitan is also a disclosure item. Auditors will also be looking at that. Any transaction with related party. Let me see what are the things. So then normally they do a presentation.
The postpaid plan in 2023.
This is called meaningful engagement with
2023 was an exciting year.
So Maxis made 10 billion sales. Profit is 2.28 billion, right? Profit. So that's pretty good, isn't it? Pretty good. So 10 billion sales. Profit, EBIT profit, earning before interest and tax is about 2.2 billion. So the margin, net margin is about 20%. Pretty good, huh? I don't know how many of you are Maxis phone users, but looks like they are pretty profitable business. Okay. So I hope this gives you a perspective on how the auditors are appointed and how financial statements are being presented. They do not need approval of shareholders, but questions can be asked. So you can see that during the meeting, this MSWG will ask questions. Actually, these are the Minority Shareholder Watch Group. It is a non-governmental body that's formed to represent minority shareholders. Now, let me ask you a question. How many of you are shareholders of listed company? Can you give me a 2 in your Q&A? How many of you are shareholders of a listed company? Right? Can you key in a 2 in your Q&A box? Just do a survey. Chat box. Key in a 2 if you're a shareholder of a listed company. Nobody. Got anybody shareholder of a listed company? Any shareholders? No shareholders, but actually all of you are shareholders, Because why? Your EPF, yeah. Because of your EPF, the EPF invests in shares, yeah. So in order to look after your interests, the minority watch group are the ones that will ask questions on your behalf at the AGM. Because if you don't ask questions, then you don't know what's actually happening, right? So the purpose is to find out whether the company is properly run and whether proper processes are put in place, yeah, to manage those investments. So the minority watchdog group basically are the ones that will go to attend the meeting, and you can see from this presentation, these are the questions that the minority watch group have asked. They asked quite a few questions, you know. You can see all this are the minority watch group. Okay. So after this, then the shareholders can ask the question. All right. And these are the shareholders who ask questions after that, including myself. So I asked, what is the Maxis strategy in the 5G landscape given the cutthroat competition? And they replied on the chat box on live because he's on video. Okay. Okay, let's stop sharing and go back to the slides again. Okay, did I answer your question on the auditors? Okay, now provision relating to auditors of public company, appointment of auditors in public company. So the answer is appointed, right, by anytime before AGM, feel casual, then at the resolution meeting at AGM is appointed and will hold office until the next AGM. So again, the power public company failed to appoint, they can appoint somebody. You can take a snapshot of that. Term of office will be from AGM to the next AGM, okay? So chapter 3, relating to provisions, fixing auditors' remuneration. Again, you will answer what? So this is the answer. Obligation to furnish particulars made to auditors. If a company receives with a notice of 5% from members of shareholders or requesting particulars of remuneration paid to auditors, company should prepare forward a copy to the shareholders. Resolution to remove auditors. Members may remove the auditor at any time by way of ordinary resolution at a general meeting. But the auditor can actually speak at the meeting, right? And give his reasons why he shouldn't be removed. So special notice, remove auditors. Notice of registrar to remove auditors from office. Procedure to appoint auditor by written resolutions. You can shorten that answer. Procedure to appoint auditors and meeting of members. How the auditor can resign? By giving a notice, written notice. So take effect after 21 days. Notice of resignation. After that, you have to send, the company to send a notice to the registrar of companies within 7 days. The rights of a resigning auditor, these are his rights. If you want to talk to the people before you resign, duty to inform. So when the auditor ceases to be an auditor, you have to inform the registrar within 7 days. This one we know, just now we saw at the Maxis meeting, auditors should attend every general meeting. We saw that just now, 285, Maxis AGM. Auditor is another person to enjoy qualified privilege. He cannot be sued for defamation and the information is qualified. Duties of auditor to trustee, they're supposed to give them a notice. Okay, Division 4, indemnify insurance. So audit officers and auditors can get coverage, insurance coverage. Okay, professional indemnity coverage 288, 289. Okay, so we have finished this. Go back and tidy this up. The next part of the question is, what's the aim of auditing, type of auditing? This we'll do next week. Okay, we'll do this next week. So you go and clear this up for this week. I hope you have already done some skeleton answers for this. Right. Okay, any questions? We're coming to 1 o'clock already. Any questions? Any questions to ask? Okay. So do tidy up on the answers. And next week we'll continue the other part of the quiz, which is basically asking you what are the type of auditors. In fact, the answers are found in your lecture notes. You can actually type those in. And how to audit fixed asset. Next week we will discuss in further detail what is the process to audit fixed assets. Okay, your attendance have been sent to me. Thank you. Okay, have you all formed the groups for your assignment? Please form your groups or assignment and then WhatsApp to me here, your group A, call yourself group 1, group 2, group A, B, C, D, E or whatever. Put down your name and student number for your group. This is for your assignment and for the pembentangan. For quiz, you do it alone. It's a single person. So everyone submit for the quiz. For the assignment and the pembentangan is by group. So last week somebody told me they already formed small groups, 4-person. If you're comfortable with 4-person, you can stick to it for both the assignment and for the pembentangan, the presentation. Just now you saw an example of the presentation, right? Earlier on, where there are 5 people, all the 5 people appear in the presentation. So you can do that. But I think it's easier if you have the same group doing both assignment and also the pembentangan. To me, it seems more streamlined for you guys. So can you all send me the list of names this week? What are your groups for the assignment? Yeah, and also for the pembentangan. So put your group. I think we can easily form maybe 5 groups. 21 divided by, if you have 4 people, right? I think 5 groups now. Maybe call it A, B, C, and D lah. Right, E and so on. So form your groups and WhatsApp to me this week. Any questions before we sort of sign off for the day? Any questions before we sign up for the day?
So just to ask again, the due date for this assignment. Oh, sorry, we have another part, right? Next week.
Yeah, correct. So what I want to do is you guys tidy up this, because today is quite heavy, isn't it, in a way? So tidy this up, and you want to do something on types of auditors, we can discuss next week. Next week we will tidy up lah. So so it won't be next week lah, because we still got another part to go, right? Which is the type of auditors and also how to audit fixed assets. So once you finish that, then that is considered done. You can submit maybe 2 weeks from now lah. After that, so this week your what you need to do is you need to tidy up this Akta Syarikat on financial statements and on the audit, yeah. And then form yourself into the groups that you want for the pembentangan and for the assignment. Preferably same members in both lah. Okay, same members in both. Makes it easier to track. Okay, is it okay with that? No other further questions? So to recap, what we did today is we saw the WorldCom at the beginning of the morning. WorldCom, what actually happened, right? So you can see the usual red flags. If you compare with Enron, the similar red flags come out lah. Unethical behavior, CFO under pressure to cook the books, listen to instructions, and how WorldCom cooked the books was they basically hide all the expenses and they actually classify expenses as assets. Put it under capitalized assets. So you will have very little expenses, and then your revenue, if they can cook the revenue by inflating fictitious revenue, yeah. But we also learned that with the advent of e-invoicing coming into Malaysia on the 1st of August, it will cut down on opportunities for companies to inflate their profit by having fictitious invoices. It does not mean they cannot be done, but it would raise the danger level of people doing it, because they can be easily caught now, because any invoices raised from 1st August by big companies and then by all companies by 2025 needs to be validated by the income tax department via the software, the e-portal called My Invoice. It's called My Invoice, I think. Yeah, all need to go through there. Otherwise, the invoice is not recognized, and you cannot claim any deductions for your profit and loss account. So it's pretty good in terms of cutting back on tax evasion and also cutting back on creative accounting. So in your answers for your assignment, whether anything can be done to prevent creative accounting, I think e-invoicing is one of the things that can prevent this, right? In Malaysia, e-invoicing, and also creative accounting is actually caused by this thing called financial engineering. What's financial engineering? I think the Matsale, the Americans and the Europeans are very good at creating financial instruments that nobody can understand. That they call it derivatives, where they would have something called a very fancy name, but it's actually a gambling instrument, right? Gambling instrument. So a lot of this happening overseas, they call financial engineering. So when they use financial engineering, they can hide the books. Like Enron, they use financial engineering, the term called mark to market, yeah, to cook the books, to hide expenses, and also set up offshore companies to inflate their profits and so on. Then we went through, after that, we went through Akta Syarikat. We went through the sections on the financial statements and audit. So it's quite pretty heavy, I guess, today, quite dry. And we saw a bit of the Maxis AGM clip to give you a feel of how auditors are actually being reappointed, how financial statements are actually not the responsibility of auditors. They don't prepare the auditors. The primary responsibilities of financial statements under Akta Syarikat is actually the directors, board of directors. So remember, directors, one die, all die. So it does not mean that if you keep quiet, you're okay. So you're in the board of directors, anything happens, you're also implicated, even though you keep quiet. Yeah. Okay, any questions? Any other questions? Any other questions to raise before we call it a day? You all still got class later on after this?
Yes.
Okay, so I guess you need a rest and go and recharge. What time is it starting? 1 o'clock, 2 o'clock?
2.
2, okay. So you got time to go and have your lunch and to attend the second session. So next week, we will continue with the second part of the quiz, which is the type of auditors and also the how to audit fixed assets. Yeah, how to audit. What's the process to audit fixed assets? I can tell you that before you audit anything, you must understand the business model of the business that you're going to audit. You must think like a business person. So once you understand the business, then you can proceed to audit, because then You understand what you're auditing. If you don't understand the business one, you're auditing, you're just marking the checklist. You won't be a effective auditor. Okay, you won't be an effective auditor. Okay, if there are no other questions, you've already marked your attendance, and we will finish off now. So I will see you next week. Okay. If there's anything interesting, I will post it on the WhatsApp. Or if you have any questions, you can also private message me, or you can post it on the WhatsApp. Okay. All right. So have a good day for the remainder of your Sunday. Okay.
Thank you, sir.
Okay. Okay. I will see you. Sign off.
Mr. Ken,
Yes. You got a question?
can we have the sample answer of this?
Okay. I'll be replaying this video slides. So if you replay the video slide, basically you will see the thing being played out, right? Then you can take a snapshot. I will post it maybe on Tuesday or Wednesday, but don't have the exact same answer. Just now I went through, I've highlighted. You can actually cut back on a lot of the what do you call that, on the answer. You can even squeeze it to maybe 8 pages. The shorter is it, the better. That means you really understand the act. Otherwise, you cannot truncate it, right? So I will post. You will see the replay. So from the replay, you can see the presentation. You can just skip those irrelevant parts, and go and see the words that I posted. Does that answer your question?
So much. Yeah,
Okay.
it will be very helpful. Thank you.
Yeah, okay. But don't copy exactly the same, right? Try to truncate it and shorten it to something, like you distill it to something very solid and very condensed. Then you can understand better. Then you can tell your boss next time, I really understand company sec. I think I'll post it maybe on Tuesday when I get it done. Okay, so I will see you guys next week. Okay, bye.
Okay, sir. Thanks.
Okay, sir. Thank you.
Okay, bye. Yeah, drop this man. Sorry about that.